Good morning, everybody. Thank you for joining us for our intermittent session for QuickBooks Online. Excuse me. This is our second session here in our Grove Beach location. Traditionally, we actually do it up at our Cal Poly Hot House located in SLO, but I'm excited to be down here. Let's start with what I do at Cal Poly and how this works. I'm the Director of Finance and Operations at the Cal Poly CIE. I run a number of different programs. But primarily, we work with students on campus who are looking to start a business. We fund them through the summer through the accelerator program with $10,000. We make it all the way to demo day where they get to pitch their product and see if they can get investments. We just had 7 teams go through. 3 of them made it into our incubator program. And so a lot of what we do there is try to generate small jobs located and keep them here in SLO. It's a big part of our mandate with the community and the city and the county to help businesses do that, which is why we run things like this, because small business is the lifeblood of our community. And it's not just a saying, it truly is. It's where we generate jobs, it helps reinvest back into our local community. So that's a big part of what the SBDC does when they work with the Cal Poly CIE to facilitate doing this. So a lot of the consultants that work with the clients, i.e. individuals like yourself, also work with the students to help them start businesses and get it up and running. And so you have access to those same resources. So the question I always pose to people before I start is, make sure you're an SBDC client. And if you're not, sign up. These are free resources that are made available to you by the state. There's nothing in it out-of-pocket expense from your standpoint, but you are able to get appointments with consultants that can help you in your specific fields and areas. So again, if you're not an SBDC consultant at this point in time, please take the time to sign up. There's a number of different programs out there that can help small business grow. So with that said, QuickBooks Intermediate. What I like to do is, this is my second of a 3-set class that I do. I do a beginner's class where I kind of talk about what it takes to get your business set up, registering it locally, registering it with the state, setting up a chart of accounts, customers are in there, and your bank link. And that's kind of as far as I take it for that first session. And there's a couple of reasons why. I kind of want people to feel comfortable with what they're doing and proceeding through. And up until that point, pretty much everyone in the room generically can set their QuickBooks up and get it ready to run moving forward. A lot of what today's class is about taking those next steps, customizing the sales invoices to what your needs may be, dealing with out-of-state taxes and how to set those up from an accrual base. Do realize that my final class is in regards to tax reporting and any other financial closing towards the end of the year. And I do that because I basically want to start a start to finish calendar year for people to operate their QuickBooks. And so again, this is just the second of a 3-class series. I actually repeat this cycle again. So if you missed the first class, you'll have an opportunity for us to do the beginner's class again too. Please stop me along the way if there's any questions. Again, as interactive as we can make this, you'll get the benefits from it. Let's talk about why we go about doing this and the key parts of QuickBooks for you guys, right? So when I work with these teams over the summer, and I'm just going to use the teams that I work because they go through this hyper-compressed summer where they basically have either graduated or in the middle of school right now, but they want to start a business. And one of the most key parts about that is the financial side of it. So we're giving them money and saying, go out and be successful. Well, unless they have a game plan on how they're going to spend that money and track it correctly, they're not going to be able to make it to the finish line. So a lot of what we communicate there is being financially responsible and having a system in place to track these expenses, to make sure they're accounted for the associated costs against their business and get them to understand that really early on. And I'm going to start QuickBooks Intermediate by highlighting this to you guys. One of the most important aspects of what we're going to talk about today is data entry. And QuickBooks is very much the data you put in is the quality of the data that you're going to get out. Up until this point, a lot of what we do tends to be automated, whether it be the interaction with the bank or the receivement of payments, which is great because if we set QuickBooks up correctly, it will handle it. The key parts about what we do is the interaction that we have with QuickBooks, whether it relates to how we're entering and adjusting costs, payroll, and or any other client associated invoice, whether it be customer base or billing of customers and collection. So that's the key aspects that we're going to go over today and focus on. The reason for that is at this point in your business, one of the biggest hurdles you have to overcome is cash flow. Nothing will close a business down faster than not being able to manage cash flow. And when we talk cash flow, because I'm going to spend some time on this today, we're talking about managing AR and AP, okay? And really having a good understanding of as you proceed week in and week out on what is going out the door and what is coming in. Because unless you clearly understand each week that there is more coming in than going out, you're going to have a cash flow issue. And so how do we utilize QuickBooks to really help you manage that? From a scalability standpoint, I've worked for Cal Poly for almost 5 years now. Prior to this, I worked for REC Solar, really large solar company. The reason I tell you guys this is the first 3 months I was there, when they split off and became the commercial and residential, I had to run a $200 million budget out of QuickBooks, and I did it for a year. So QuickBooks can scale and handle whatever you want. And it was in 13 different states. So I like to use that as an analogy, simply to say, trust me, whatever you guys have out there, it can handle, but so much it goes into what you put into QuickBooks and how you go about it. So with that said, the key aspects that we're going to focus on today is the customer, the cash collection, the AR side, and the forecasting side, and how to use the reporting within QuickBooks to help you manage that. I do touch on sales tax a little bit. I try not to go too deep. Sales tax can be very specific to the business that you're dealing with and how it's set up. I do a final class on sales tax. One of the things I would like everyone to take away from today's meeting once we leave here is that everyone here is more than welcome to set up a one-on-one meeting with me to sit down and talk about their business and how I can help you. I don't expect today's meeting to solve all your issues and answer all your questions. I'm hoping it will guide you down a path where you can be asking the right questions to get QuickBooks set up for yourself. We all good with that? And again, as many questions as you can throw at me, the better, because as we proceed through this, I want you to start thinking about how this material relates to your business. We will go into QuickBooks and I will show some examples as we proceed. The other part about this is I structure it so that it's normally about a 2-hour session, depending on how much material we get through. I like to leave that hour at the end for any questions you guys may have. If you need to spend some time signing up, or we can go to specific scenarios. One of the things I try not to do is what will happen here is we'll get onto a subject matter that will relate to everyone, but we'll start to go down a bit of a rabbit hole. I might pull us back and say, okay, let's table this topic and address it afterwards. So again, I don't want to feel like I'm not addressing anyone's concerns here, but I do want to make sure we make it through the subject matter. And again, you're more than welcome to set up a meeting with me at any time. In most cases after this, I do follow-up sessions, only because I need to have a better understanding of what's taking place. Lastly, but not leastly, the guide that I will be going through is the guide that I use in all my sessions. You don't need to take notes. I will send it out afterwards. Just make sure I have your email address with Madison so I can follow up afterwards. In turn, that will be your best way to follow up with me and see if you guys want to schedule a follow-up appointment. Any questions so far? Guys, can make this really easy. Okay. Good. Awesome. Okay. So let's start with, again, just a highlight here. What we've done until this point has led us to our very first interaction with our customer. And the reason I like to start here is it's the first part from an accounting standpoint, from a financial, where we either start breaking out or associating certain costs and then passing those expenses on to our customers. And that relationship between costs that we're spending on our business and what we're charging our customers are key, right? And having a grasp on what we are spending on and then what we are bringing in is the management of cash. And thus, cash flow is managed by making sure that we stay on these two components. So as an example, before I jump into this, the simplest task that we can use to manage our cash flow these days is to clearly stay on top of our AR and our AP. So as an example, when I was working at REC Solar, every Monday I'd run in my CFO, I'd run AR and AP, and we'd schedule what we were looking to pay out that week, right? And the system will do that for you automatically, but depending on your cash flow scenario, you have to prioritize those invoices. And no matter how small or how big you are, businesses have to do this. Unless you're a gazillionaire, like a Microsoft, we're all managing cash flow because you still have expenses that you need to cover, whether payroll associated expenses or cost expenses of goods that you need to bring in to run your business and operate it. So one of those key components is managing that side and understanding what those time horizons are when it comes to managing the sales and customers in general. And one of the key aspects that we don't talk about that I like to highlight right in the beginning is managing your terms with your vendors and your customers. And I highlight this really at the beginning of this conversation because it's one of the key aspects of cash flow. And I always get this look from people like, terms with vendors and customers, cash flow? The thing about it you need to understand is that if you have net 10 terms with a vendor that you're dealing with and net 30 terms with a customer, you're out that cash 20 days, right? And in your mind, you don't think about it that way because you see it within a month period of time. But from a business perspective, where you start on the 1st and you close on the 30th and you close your books, you're a negative cash flow scenario. And we need to teach ourselves to be looking at it from that financial perspective to wrap our arms around the cash flow perspective. So that's a key lesson that we want to start with when we deal with both customers and vendors from a cash flow perspective, because again, nothing will shut your doors and turn the lights off faster than lack of cash flow management. It's the biggest hurdle small businesses have to overcome in those first 2 to 3 years. Feel comfortable with that part of it? Who's currently, and I know I can't talk to the people online right now, but who right now deals with customers specifically within QuickBooks from a clientele perspective? You guys show a show of hands for who is exclusively using, and again, I'm asking this so I don't spend too much time on customers. There's not a room full of people. Who uses it more from a management perspective to manage their business from a personnel standpoint and not so much a product standpoint or a service-based perspective? Service-based, service. Oh, interesting. 10 years ago, it would have been a very different setup. I've been doing this a really long time. I tend to find that a lot of the small product manufacturing side was the growth sector just 10 years ago. And we've almost done this 100% flip over to the service side of things as we proceed. So, okay. And so primarily, most of us are invoicing directly out of QuickBooks Online. We're shooting it off to our customers. We have the banks linked up. They're paying us quickly because we're going through QuickBooks Connect. We get paid directly, come in the next day, and we match it up to the invoices. Good so far. Wow, that's actually really, really good. And so as we proceed through this process, right, we're doing it routinely. We're closing out the books financially at the end of the month and reconciling it with our bank accounts. QuickBooks makes that really easily. Okay, you guys are making this really easy on me. Okay. And then from a costing perspective, in regards to costs coming in, we're capturing them on electronic invoices that are coming in, or we're physically getting those invoices and entering the data in. Give me an idea of how we're going about capturing the costs on the other side from the expense standpoint. And more importantly, are anybody here using the payroll module within QuickBooks Online? No. So most of who we deal with is independent contractors to understand. That's gonna make it a little bit harder here. Okay. So really, you guys traditionally, from an operating standpoint, are just running a service-based business. Do you have any employees that work for you other than the independent contractors out there? Part-timers, anything like that? Okay. Okay. And we have them set up within this system. Perfect. Wow. Let's get started now that I really have a better idea. Okay. And as I go through this, guys, start prepping me with questions in regards to areas that you have concerns relating to your business out there so that we can get a better feel for where the concerns are. I'm going to give you the material. I'm going to cover what we need to know. But again, as I start to understand my understanding of what your needs are, start going down those paths. Okay. So chapter 3, sales and customers, part 1. So the key aspect. So in this chapter, we're going to be talking about adding customers, which for me, just going through the room, most of you have done pretty quickly. So I'm going to scan over it really quickly just to make sure we're all comfortable with it. I am going to go into products and services because clearly here, there's a number of people here that deal on the service side. And we could talk about breaking out different types of services and how we go about accounting for those different accounting services. If you utilize that, if you have different locations that you wish to associate costs against. Do we all do business in one central location? Do we have other locations out there that we wish to track cost against? Those are the kinds of things we want to start thinking about when we think about tracking the cost side of things. Sales and workflow. So from the sales and workflow side, what does it take to get your job done from a cash flow perspective? What does the customer need to do, pay on time to facilitate all those transactions? We're going to walk through that process as well, along with what reports we can run within the reporting manager to manage the cash flow and understand what those time horizons start to look like. I know this may not relate to a lot of people, but a lot of what I go through here is to build a system or a cash flow system for small companies to have a clear understanding of where they're at so that moving forward, they can be successful. But the end goal is to create a concise accounting setup so that when these businesses get to the point where they're looking for investment, not to say that any of you aren't or might possibly in the future, But they have it set up so that those investors, the very first thing they're going to want to look at is the financials. And so showing that you have a clear understanding that your business has clear direction is one of the things we work with the students on. And it's one of the messages we convey to the businesses out there that we work with, is to make sure that you have a clear, concise understanding of where your business is financially at. And that's, again, where we come back to the cash flow management side of things. So talking about cash sales, when we deal with customers at pay at the time of sale, we don't have any cash sales here to deal with. Any cash sales? Okay. So
but they're cash. It's not cash sales, it's more like the customer wants to pay cash.
okay, and then you just facilitate the deposit?
Yeah.
Okay, so that's pretty straightforward too. I only like to touch on that because when we go into the banking system doing the reconciliation, cash deposits process slightly different than credit cards. So.
Yeah, that's one of my issues.
Oh, not a problem. We will get to that point in time and go over it. We will also spend some time on accounts receivables when customers pay and the management of that. Most of you, excuse me. I can't see all mine. I'm not going to spend too much time on adding customers here. It's pretty straightforward. If anybody has any questions in regards to customers, key aspects that I do want you to think about from a tax perspective. One area I spend a little bit of time on. Now, QuickBooks will do tax accruals for you if it's set up correctly, meaning you've entered the zip code, the county, and the tax rate for the associated county in the system. It will accrue that tax for you so that you can report on it later, whether it's quarterly, semi-annually, or annually based. The key aspects of that is that it does need to be set up correctly. The key part about that being set up correctly is the correct address, where those nexuses are, and most importantly, the zip code. So what QuickBooks actually does is it actually pings the post office, which references the exact location of that zip code and the associated tax rate. And so the way tax rates are structured is at the state, the county, and the city level. So it looks at that zip code and it says, are you in the city? Yes, you are. Okay, you get the 0.5%. Are you within the county? Yep, you get the 5%. Are you within, you get the 3%. Are you within the state? Yes, you get the 5%. So setting up, making sure that you're setting up both yourself when you initially set up QuickBooks and your customers correctly has a direct impact on that tax accrual. Okay? Just keep that in mind when you're dealing with customers. Now, most of you are service-based, so it's not an issue. When it comes to materials and things like that, that's where this can come into play. Again, just keep that in mind. Take the time to make sure that you are setting these things up correctly. Also make life a lot easier for you down the line. Okay. I know it seems like a lot when you first open that screen and there's so much on there, like 2/3 of it's non-relevant to me. It's true, but make sure you're getting the relevant information in there. Take the time to go through and put it in. And the same goes for any other part, whether it be a vendor or a customer, and specifically an employee. Make sure that you're spending the time, especially when we're dealing with those independent contractors. Because when it comes to the end of the year and we need to 1099 them, QuickBooks does a fantastic job with 1099s. Like super easy, 3-ply, send one out, send out, but got to have that information in there so it can pull on. And if you don't, it makes life a lot harder because here's what you're doing. You're chasing your tail at the end of the year, just like everyone else. So take the time to make sure that these things are set up correctly, line item by line item, take your time. I can't tell you how many times that I've seen people just come in with these huge tax issues relating to accruing incorrectly. It's the zip code has been entered incorrectly.
Well, since you're on the subject of 1099, is it in this state that if they're incorporated or not incorporated, it makes a difference whether they need to be 1099?
Yeah, it does. You want to be really, really careful once you go down. The California changed the laws and how it treats independent contractors a couple of years ago. Here's my recommendation to everyone out here. Let them tell you. Do not ask of them. Let them dictate to you if they're an independent contractor or not. Because here's what happens. If the owner starts to lay on you, you have to go through all these mandates to make sure that you hit all these boxes that they qualify. But if they come to you and say, look, I'm an independent contractor, I will work for you. Here's my W-9 on file. Just keep it super simple. But the problem with the independent contractor side is if you do have the independent contractor agreement with them and you go down that path, the state will check every single box. And that's where it gets a little tricky right there. I don't want to give you any legal advice when it
So
comes.
we have had this conversation on accountant, because the accountant's the one.
Oh, yeah,
that's
he-
requesting.
He is going to request it. Well, and the reason he's doing that is to protect you.
Yeah.
So that, because it's a really sticky subject. Anybody else here deal with anything? No, okay. It's very particular in the state of California. They changed the laws, I said about 2 years ago. I tell you, when we go through independent medicine knows this. It's like a 3-page document on campus we have to complete now when we deal with independent contractors because of this fact. So they take to you what they are. Keep it simple on your side. Otherwise, if you start going, your account, and you should say that to your accountant, we should just keep it straight line simple. The reason he wants the supporting documents for the write-offs, we had to claim them, because then you can maximize how utilizing the independent. So, everyone good there? Okay, so, and taking the time to make sure our vendors were all clear why it's so super important, not just getting the product and or the bill to the customer, but also from a taxation standpoint and an accrual standpoint that we have it set up correctly. We talk about terms. I touched on that really briefly, again, at the beginning of this, how important it is. Make sure you are clear with your customer on the terms and what that looks like, right? And again, if you have to decide that you're dealing with a smaller company that you don't have a relationship, and to manage that expectation with that customer, you shorten those terms, then so be it. Communicate that with your customer. One of the biggest issues that small businesses run into like yours is it works the opposite way too, right? You guys go out to deal with vendors and you have no history, and they're like, well, who are you? We want a deposit, so on and so forth. One of the things that we recommend businesses do, such as yours, is go in and open a business account. Put a $500 deposit down in a bank account and start building business credit history for your company. Credit history, right, is the ability to pay back debt. People perceive credit to be the other side. It's not. It's the ability to pay back debt. Build credit history for your business. Open a business account. Okay. Start using that card for your business expenses. At the end of the month, pay the card off. In 3 months, you know what you will have? Credit score for your business. When you call vendors and they run you through the DMV, guess what they're going to find? You're a good business. We will sell product to you. We will give you what? Good terms. Okay. Simple little things that you guys can utilize to help manage your businesses, your cash flow in turn. These are important relationships. Dealing with your vendors in many ways is and I don't know, we're all service-based, but in some way we deal with a vendor, that relationship is key. Getting good terms with them impacts your ability to give your customers terms. In terms, that is how you manage your cash flow perspective. These are key points that we need to understand along the way. The longer you can extend your terms out with the vendors that you will with, the more time you afford yourself to manage those expectations from a cash flow. It also enables you to plan more accordingly from a cash flow perspective. Because a lot of the time, the point businesses are at this point, it's still month to month that you're dealing with these situations. Once you start to come to terms with your cash flows, you can start planning out months ahead and start forecasting out, which helps with the growth of your business, which at the end of the day is what all successful businesses want to do. We good on customers. I said I wasn't going to spend too much time in there. I spent like a whole 10 minutes talking about zip codes. Again, repeating the exact same thing. It gives 3 examples on everything. The nice part about these chapters, and I should spend some time talking about this document because I've been doing this a long time. And every couple of years, QuickBooks updates the document, the learning documents that they send out. For the longest time, guys, I used to teach QuickBooks Desktop, and then they dragged me kicking and screaming over to QuickBooks Online like 3 years ago. I still fight it, I'm not gonna lie. Still have to go back to my desktop just to stay loyal. Not gonna lie, I am more partial to the desktop side. I've worked on it, it's more robust. There's just 1,000 things that I feel like they try to make an app out of it is the best way to describe it, and like try to jam as much as they could, but it's QuickBooks, okay? But it's not, if you've worked with the desktop for as long as I have, it's just not quite the same. With that said, it's a fantastic system, okay? So I don't want to take it back. With that said, and I get this a lot, right? When I teach it to the students in the hot house, I know up until a year ago, I have a relationship with Intuit. We work with them. They give us free licenses for our teams. I would always push them to desktop. And so one day they're like, no, you have to give them, we're only going to give you a free license for online. So they have to take the license for online. But what's happening now is they're coming back at the end of the license go, We want to keep the license, but we don't want the online version. We want the desktop version. So it happens out there. Great systems. You can actually go back and forth. Just so you know, I get that question a lot when I bring this subject matter up. You can transition back. Most people think you can only go from desktop to online. You used to. They've actually come back because so many people complain. They now have the ability to go from online back to desktop. Yay. So with that said, really nice. I'm not going to spend too much time. I did want to talk about this document in that it will, any questions that you may have relating to the subject matter that we're talking about, it's going to give you 3 different examples and 3 answers. So a lot of what I go over with you today, there will be additional sample questions and answers in this document when I send it out to you. The other point that I like to make is, and I still do this to this day, QuickBooks probably has one of the best resource pages. I will actually show it to you at the end of this document. Any question I have, and I have a direct relationship with Intuit, I can email them directly and ask. I don't. I go to their resource page, right? Because here's what I can tell you. After 25 years of doing this, there's not a question out there that I can pose that someone else hasn't asked 100 times on that. And here's the great part. There are really concise and great answers. It's monitored by a moderator from QuickBooks. And I can't tell you how much, if I'm trying to learn something new, especially with online, yeah, I've used it more lately than I have in a long time. Only because I'm still learning too. Especially with QuickBooks Online, where everything is not where it used to be for me. It drives me batty because I've done it for so long. It's like, oh, wait, it's not. Oh yeah, now it's back on the customers. The resource page is fantastic. And specifically rating to specific subject matters, it is amazing. So if you have this really specific question that you just can't answer, I would start there as a reference point. It is a great point. And from there, you can branch off, you'll be pointed in different directions. And again, the SBDC is always one of those great resources. But from a question standpoint, where you just want to get that answer, the QuickBooks resource page is amazing. Really, a really great resource. Okay. We should have one more question here, and then we're going to jump into products and services. Purpose of products and service list. So this should be touching a little bit. Okay. Who utilizes more than one service within their business right now and has it broken out or structured in that manner? Anybody here? So what I mean by that is once we go in, we can actually build out specific line items within the chart accounts around specific services that we want to either track, report, or track the associated costs on, right? So when we bring that line item up, we can associate with a specific GL, or we can have specific projects within the system. So let's say we had a cleaning service where we have multiple locations we're cleaning at, and we look to do different services at those locations, but we were buying supplies for everybody, right? And as those supplies are utilized, they are associated with each of those products. Do you have anything similar to that? I'm trying to get a better understanding of what the services that you're providing for whoever it is you're providing, right? Do we have more than one location? I think we talked about this. Most of you said no in that regard, or you no.
Well, our services are provided in homes, so we've got
Multiple. Okay. And so how are you going about from a expense tracking standpoint? Are you doing it by the client? I'm assuming you're doing it at the client level then.
that's what we plan to do, right? Actually start an operation.
Okay. So this would be a great example. It's just similar to everyone else, where we just have a clientele. How are we tracking those costs against those clientele? And the reason this is really, really important is that you want to make sure that you're capturing the costs in the correct location, whether it be the correct client, the correct building, the correct whatever it is, right? But how do we make sure of that? Well, the way we make sure of that is we're tracking the associated expenses that come in. One of the mistakes that small businesses make at this point in time is they are still consigning their associated costs, meaning the costs come in and they pay for them. They bill the customer at a certain rate, and right now they're covering everything. Yay. But did they have a clear understanding of what it's costing them to run their business? No, they do not. Why? Because what you're paying, what you're receiving from the customer, and what you're sending out the door have a ratio between the two. And for you to clearly understand that, you need to go back to understanding how much you're spending to continue working and interacting with that customer. Conversely, how much you're getting from that customer for that service. And that's where businesses struggle from a costing perspective. So how are we tracking those costs? We track them at the vendor level. I buy everything from Amazon. It comes in, I tag it to Amazon, boom. Well, no, right? That's what we do. Traditionally, we should be bringing those merchandise in and then tagging it to the associated customer. It was 6 bottles. Well, they took 3 for this customer, boom, 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 and so on and so forth. But how do we go about doing that, right? Without making the whole system that much more complicated. This is the interaction that we need to have between the customer and the vendor to ensure that we're capturing, tracking, and have a clear understanding of where we're at from a business perspective. Right? Now, everyone here is a service-based business, but where this can really affect a business is on the manufacturing side. And I'm just sharing this as an example because you'll actually get some relationships in regards to the service side. So we had a team, and I reference back to the teams a lot, guys, so I'm going to apologize. It's only because I'm used to working with all these different great teams at Cal Poly. But we had a team that was building a cool device that would recharge your Tesla car in your garage, and it cost like a third of the cost of one of these big Tesla chargers, right? They were 2 engineers, and it plugged into a 3-day phase adapter, what we plug our dryers into, right? And they were brilliant, just came up with this great device, amazing problem. All the pieces came from all over the world, China, Taiwan, and they came to me and they're like, yeah, we got this, we've got funding, we're going to build 50 of these, and we're going to go down to this great show in LA. And I'm like, that's awesome. When you, it's like, yeah, we're going to have it done in 30 days. Well, it was about 18 different parts it took to get it. The first parts came in the first 2 weeks. The second parts didn't come to 6 months later. And so they had one to show at this demo day, but they did. But what they had to learn from that is that having an understanding about when I place an order and a part comes in relating to everything else that I do in business is key. And that I can't build a product unless I have the parts for it. So now we have a tracking system, and we use a purchase order system to track where those parts are. And when they get low, the system will reorder. So we always has them on hand to fulfill that order. But getting an engineer to understand that timing aspect, their minds don't quite work like that, right? They're about solving problems, not understanding timelines. So again, I use this as an example because it relates to how we look and operate our business moving forward, how that interaction is with the customer and our vendor again. Sorry, I like to tell stories.
So the moral of the story is if you're not using purchase orders now, start getting in the habit of using them.
At some point along the way. I mean, I run 2 buildings for Cal Poly, and we use purchase orders in-house to maintain budget line items, right? So as an example, for something simple, like let's say we're cleaning fluids, right? I'll start at the end of last year, I'll go through and look at everything we spent, look at how much it cost us, and I'll generate a purchase order for that vendor for that item. Now, we can bill against that purchase order, but we can't go over it. And every month I go back in and make sure that we're in line with where we were, budget versus actual, to as well, from a budgetary perspective, right? This is how you can maintain control, right? From a budgetary perspective, if you are struggling at times, right? But putting these controls in place by utilizing things like purchase orders, sales orders, to help you manage that side of things is key, right? Purchase orders are very specific to the business you're working on and how you want to go about structuring it. So again, if you want more information on the purchase order side, there's a great module within QuickBooks to help you manage the purchase order. It does take a little bit to get it set up, but once it's set up, it's fantastic to use. It's especially great if you have an inventory system that you like to utilize or draw down in any way. And again, full service based.
So that's where we're going. Even though we're IRS considers a service business, we're going down
that avenue,
down the inventory channel. So
okay.
Eventually, each store with product, integrated inventory,
and then
with order management, all that.
That's when you're going to want to start taking a closer look at that purchase order system, because then that way you can segment things, certain items out for certain locations and start tracking them separately, right? And that's where you're going to have to shift to a project price. This is where we go down the rabbit hole.
We do have
Okay.
a question online as well.
Oh, perfect. First question of the day. Bring it on.
Yeah, Morgan is asking if that is managed / reported with QuickBooks, or is there another system for supply chain?
No, there's not. Actually, QuickBooks has a very robust inventory system that can be built out. It is an add-on module within QuickBooks. Gosh, I say that. You know, I'm going to be perfectly honest. I've only used the desktop inventory control system. I know it's available within online. I personally have never used it. Now, just from an inventory standpoint, and to give you an example again of how robust their inventory control system is. I used to do consulting for a local winery called Sexton Winery, has a large winery up in Paso. And they ran their entire inventory system through QuickBooks. And we're talking 300,000 bottles a year that they ran from the production side and probably half that on the sales side. And they managed the inventory system for multiple locations through QuickBooks. So again, if it's set up correctly, managed correctly, yes, it can be done through QuickBooks. Again, guys, with everything we're going to talk about today, the customers, chart of account, all of it goes to setup. It's the time and effort that you put in to set things up correctly and be entering the correct data. It's garbage in, garbage out, quality information in, quality information out. Take the time. I can't reiterate that enough. So much of what I do when people come to me with problems is actually fixing really little things like bad zip codes, wrong tax code. But what does that mean? Well, that means the last 2 years I've been filing with the BOE at the incorrect tax rate. Guess what they got to go do? Go amend every single one of those, report them all again. Or if they had just on something so small. But that time, that effort, it's wasted. So take the time to make sure we are doing it correctly. I cannot highlight that enough when it comes to QuickBooks. Okay, so purpose of products and services, make it easy for you to fill out forms when you add customers, when you add a detailed list of each product or service to sell to the customer. I really like this part. Link to the account in QuickBooks Online, create the journal entry based on the form type and the account linked to the items on the form, assist with behind the scenes accounting. What does that mean? It means that once we set up a product and service within the system and we start to tag toward, the system is going to do a ton of accounting in the background to account and proof of that. So that when you guys go to do your reporting, that information is there. So here's the way I explain it. For every one action you guys take in QuickBooks, QuickBooks is doing about 10 transactions behind the scenes, right? To simplify things. Nothing crazy, but it's really the way it goes about it. And again, this is why the structure and the setup is so key to QuickBooks. Like if you decide, and I've had this, right? That all your revenue is going to hit the sales tax line item within QuickBooks, I can't stop you. But when you come to me and I sit down and I go through there and I'm going, everything revenue is hitting the sales. Well, yeah, that's the way I set it up. Oh, how's that working out for you? I can't help you there, but if you understand what's taking place and how it relates to your business and what needs to take place, you're going to learn from the system. And this is where you'll start to pick up on things without even having to look at the bank account, because you're going to come in, you're going to see that dashboard page and go, something doesn't seem right. Right? That's when you start to understand your business. That's why it's so important that you have a clear understanding of where you are at financially, especially from a cash flow perspective, because it drives everything else. So this helps make reporting on the products and services easy, which is where this all goes to, right? Generating concise, detailed reports on what's taking place with your business at this point in time. And anyone here played with the report manager in QuickBooks? Yeah. I love it. It's as robust reporting manager as you're going to find out there. Again, you can search reports that other people have made. You can save them. I use them month in, month out. You can auto generate them where they'll actually be emailed to you automatically. So I use it a lot for payroll reporting, what have you. You can schedule it to just automatically generate that report and email it to you. Great reporting. Conversely speaking, if you're utilizing for things like cash forecasting, you used to do that quite a bit. You can build customizable reports that you can run on a monthly basis to facilitate that. We talked about the AP and the AR. I just have it automatically run when I came into the office. It was waiting for me in my inbox. Right? It exported it into Excel for me. It did it all. It's great. Right? It's just waiting for me there to run the reports. Pull it up. There's the next week's AP and AR in front of me. I got two numbers to work with. Okay. Who needs to get paid and who's not getting paid? Because every business works that way. Right? How am I managing next week? What does next week look like? Repeat cycle again and again and again. That's managing cash flow. I know it seems repetitive, but it is. I do the same thing every day, 5 days a week, 4 weeks a month, 365, and then I do it again, and I do it again, and I do it again. And I find things I do better, and I find things I do worse, and I try to do a little better and a less worse. And that's accounting. Lastly, but not leastly, if I can get this box to scale. I allow you to track quantities purchased and sold when you use the inventory and inventory businesses. So actually highlighted for what I was saying at the very, very beginning here is that it does have a fantastic, robust system to track inventory if you need to. Again, taking the time to make sure that the inventory system is set up correctly. Do not just try to dive into it. It is rather complicated. And the moment you try to set up the inventory control system, know that you are going to have the PO system flag in, because that's part of the mechanism that is used to track the inventory system coming in. Is there any more questions? I see two chat.
No.
No? Okay, so products and service types. I'm going to go over this really quickly because most of us know what a products and service is. Tell me if anything is a little different with your business so we can have a better understanding of what's taking place. So services you provide to a customer, e.g. consulting, and anything else that goes along with providing a service. No materials involved, right? And I highlight no materials involved because then we start dealing with taxation. So service-based, good to go, straight line. Non-inventory parts. So these are things that we were actually talking about a little earlier on, things like supplies or materials used in providing the services. This is where we're talking about the cost understanding. What am I spending and what am I getting from the customer, and what is that relationship? How does that look? And this is where breaking out associated costs with customers is key, and understanding how you're bringing in the products to provide that service, and in turn, how are you breaking them out? I used, 14 hours of consulting time to work with this individual. Well, did you spend 30 minutes driving there too? Did you spend 30 minutes driving back too? Right? Time and mileage. Okay. Simple little things that we don't always think about when it comes to operating a business, but those are costs, right? Which are offsets at the end of the day to your final revenue numbers. So one of the things I spend a ton of time on with these small businesses, I'm sorry, I'm going back to them again, is when they come in, a lot of them come from the College of Business, right? So they have all this information in their head about how to run a business, how to set it up, and how to do it. Do you know what they don't know how to do? Don't know how to write a check. Don't know how to open a bank account. I mean, like no clue. No clue in the world. Because they have it's like the driver's license. You go to take the test, you read the book. Can you drive a car? No. When can you drive a car? Once you got behind the wheel and you actually drove and you know that experience. Small businesses don't always have that up front, so they don't know. So understanding that part is so key for them. And one of the parts that they struggle with is on tracking those costs, because everything to them is focused on the product side and not the cost side. And here's what happens at the end of the year. I get them coming to me with just a pile of receipts going, these are all the costs. What do we do? Well, I sit down on QuickBooks, start entering those costs, guys. It's going to take us forever. Yeah, well, then you should have started earlier. That's why we did the class where I told you to start earlier. It's a hard lesson to learn, but it's a lesson that needs to be learned. The more costs that you can capture for your business, the more profitable your business will be. Okay? Because if you're not capturing those costs, who's capturing them? You, and you. So again, making sure that we're thinking this through from start to finish about what it takes to capture those costs from a customer's standpoint when we're dealing with our customers, I should say. So food catering is the example that's on here, but it really relates to anything, whether it be a cleaning service, whether it be anything service-based. Inventory parts. So inventory parts bought, tracked, and sold. Keep track of inventory parts on hand. I'm guessing since most of us are service here, none of us retain an inventory part right now, or utilize it in any way.
We do have one on.
Oh, perfect. Okay. So let's talk about where this can be key and how and why it's so important to QuickBooks from an inventory perspective. So I think I talked the example of the charging device. So one of the examples I use here is a great inventory part. And the way we utilize QuickBooks is I used to work for a winery, right? And so every year we have to do this huge bottling, explain 300,000 bottles. Well, most people think of a bottle of wine as just a bottle. Well, it's not. It's about 8 different things. There's the bottle, there's the label, there's that little cap that goes on top, there's the cork, that screw thing, right? Here's the crazy part. They all come from different places. So when it comes to bottling all these wines, you have to have 300,000 of all of those things on hand at one time. So when you're planning from this in the prior November, you're sending out purchase orders to all these companies and they're coming back and going, I only got 100. Oh, I've only got 50,000 of those labels. I'm not gonna have 300,000. But because the purchase order system knows that and you've entered and you've got that response back from the vendor that you're dealing with, you can account for that. So when it does come time to bottle, the inventory system knows you can literally look at it and say, I can bottle 299,000 bottles. We're good to go. Boom. This is the kind of control that the inventory system can use now. That's on a larger scale. It's managed very, very carefully. But you can also use that on a small scale. Like say something as simple, and I use this, we had a cleaning service, right? Each cleaning service with a certain amount of supplies that would do so many jobs, right? We broke it down to understand what each one of those cost by individual, by the hour that they spent cleaning. So they could understand clearly what their margins were. That's the kind of thing we're talking about when you understand your inventory, and it can be scaled all the way up to a large winery, or as down as something as simple as a cleaning service. It all depends on how it relates to your business, how it's set up, and how it's structured. But most importantly, it's helping you do what? Costs and deliver a timely service or product to our customer. Key aspects of a successful business. Right? Questions? The inventory control gentleman, did he have, or lady, I should say, did they have any questions?
Not yet.
Okay. Bundles. Okay. Bundles are groups of or products and services. So this is where we take multiple products and or services and group them together. If I was looking at a product side, I'd say a winery, we have 1, 2, 3 different bottles of wine. We order those, they're invoiced, that go out. But let's say it's a little bit more complicated than that, right? Let's say it's kind of like what we talked about with the charger, where there's multiple components that need to come together before that product can either be built, tested, and shipped. This is where bundles come into play, okay? Now, I use that as an example, but it could relate to anything else as well, right? How you go, if you have a specific service that you provide, and then you have multiple different versions of that service, you could build them out from a costing perspective within QuickBooks, so that when you're going in to generate that invoice, you're simply selecting on that service line. Does anybody have that structure already or utilize something similar to that structure already? No?
Yeah,
Okay.
but we're not there yet.
Okay. Well, again, this is where we want to be, right? Is to have it structured so that
Yeah.
each one would be built out individually associated with the service that provided. So that when you're going in to invoice that customer, you're simply selecting the selected service, not having to break it out each and every time. Now, the nice part about that is and I'm going to go a little bit down a rabbit hole here, but bear with me. If you're tracking your costs really closely and itemizing them out, so as an example, let's stick with the cleaning service. If you're buying a bottle of cleaning fluid and know that each cleaning service takes 20%, then you can build that in so that you can clearly understand, I'm going through one of these every 5 times I go out to do that cleaning service. This is how you start to understand the margins associated with your business, because you have a clear understanding of what is being expensed each time the service is being used. Now, I know that seems really, really granular, but if you really want to wrap your arms around what is taking place with your business from an expense point, that's kind of where you need to go. And I guess the way I would look at this, and I'm going to keep this really simple, is if we had, let's say, that box, that cleaning bottle of cleaning fluid and then a bottle of Windex, and we went to generate the invoice, right? It'd be, and I'm using the soap and the Windex as a service, we would just tag the Windex and the service, and they would all be built into it from a cost perspective. We would just specify the quantity. The same is used at the winery, just so you know. So when we would look at bottling out wine, what we put in the bottle costs very, very little. It's actually what is around the wine. So the bottle's $10, the cork is $5, the cap is $3, the label's $8. So we know before we even put anything in the bottle, we've got $32 cost we need to overcome. That's why that bottle of wine is $60, just so you know. It's not the wine in the bottle, it's the bottle. And as crazy as that sounds, that's how it works. And that, you repeat that for every business that you have in the way that you go about it. That's how you wrap your mind around your costs associated with your business on a daily basis. And this is before we even talk about labor, right? We're just talking about the cost that it takes to run, right, the business from a daily perspective. We're not even talking labor yet, which obviously plays a big part in what we do because we're all service-based. Okay. Are we good with products and services and types? Do any of us use anything other than any of these 3 categories and want some more detailed instruction on? Yeah. Let's take a 2 minute. Oh, go right ahead.
Okay, so my service base is, I've set it up to be like a monthly fee.
Okay,
To do as many things as the customer needs.
Okay.
But I just bill them out and I don't individualize anything that I did to them. But I've gotten to a point where I do too much and it doesn't account to what they're paying me. So I need to kind of structure that. So
That's right.
that.
so it sounds like you have a subscription model is basically, and what's happened now is as the business has grown, you're providing more services.
Mhm.
Then you are bringing in revenue against those associated costs.
Yeah.
And so you need to have a better understanding of what's taking place. Now, you're going to have to start itemizing things out so you can see where, because what you're going to find within what you're doing is there's going to be one area that's in greater demand.
Yeah.
And that's the area you're going to have to start charging more of a premium on. You're going to find other areas that you'll be willing to keep within that subscription at that cost level. But as with any service we provide, there's certain services that are more in demand and some that are less in demand. And so understanding your clientele, right? And start thinking about it more from that way. So again, we can absolutely set up an appointment. I can take it close and be a phenomenal. Any other questions before I move on? Everyone comfortable with the service types? Pretty straightforward. Nothing too complicated there. So back to our questions again. I wonder if it would serve us here. Does anyone run profit and loss reports currently for their business? Haven't, oh, nobody, yes. How often do you run your profit and loss report?
Monthly.
Very good. Do you make it part of your reconciliation at the end of the month?
Yeah.
Awesome. That's the correct answer. You got 2 for 2 there. Really, I can't highlight enough from an accounting practice how good it is, everyone. I mean, we should all strive, make sure that we are closing out our QuickBooks at the end of the month and taking our time. I know it's a bit of effort, time and effort, but nothing will keep you more in balance than taking the time to reconcile. Can't tell me how many businesses I deal with. Oh yeah, I did it 6 months ago. I've been meaning to get to it, right? But here's what happens, right? Something happened 3 months ago that you can barely remember what happened yesterday. And then we can't figure it out. And then I end up having to do a journal, which for any auditor is a nice big red flag. Ba-ding! Okay, and I deal with that all the time. So trust me when I tell you that. And you kind of still don't know what you did wrong. So guess what? You're gonna do it again. I'm speaking the gospel here. I really, really am. Because the problem with waiting and the reason you're doing it is not just to make sure you're in balance, right? It's to learn and understand what's taking place with your business. Wait, why is that cost there? When? Trust me, you will, when you start to dig in the numbers at the end of the month and reconcile with what took place at the bank, you will get as clear a picture of what is taking place with your business as at any point in time. Okay. But the act of doing it is the key part. I mean, I tell everyone Friday afternoon, nobody wants to do anything. I do all my reconciliations on a Friday afternoon. It's just getting done. That's just my 2 o'clock thing. Got to be done. Just teach yourself to do it. It will save you so much time and effort for the very reason I just said, because you'll find something. You always find something. And if you don't, you always learn something. And most importantly, whatever it is that you did wrong, you'll learn from it and won't repeat it. But when you wait 3 months and you try to go back and you try to find it, and like, I'm not sure what it was, let's just do a journal. Journal log, boom, boom, boom. And then 3 months later, we're back and say, oh, that's what it was. I get it all the time. So good work habits when it comes to accounting practices are key. Right? And I would say taking the time to make sure that you're doing that with the bank is probably one of the most important aspects. With that said, the reason I don't do it, everyone's intimidated. It's really easy, guys. Okay? It really is not that hard. If there's anybody here that wants to sit down and I will walk you through the process. I go through it with every single team that comes to the hot house because I get this look of sheer fear on their face. It's not that hard, guys. It really is not. Sit down, take the time, get your bank statement. And once I do it with them the first time, they're off to the races. Honestly, it's about giving you guys the confidence just to do it. So please, please, please keep that in mind. If you guys want to share with me what your businesses are, just give me a little bit of a better idea. Kind of started on this side. I'll start on this side.
So it's a senior mobile home park
Okay.
and that I manage. And so we, of course, we don't have products, but we do have we deal with a lot of vendors. And,
Okay.
And so the main thing that, we're looking at now is how to use QuickBooks to budget. Because it's coming end of the year and it's our budget time,
Sure.
and, we've never used it before for budgeting.
Okay.
That's a big-
And have
It's a big
you
thing.
built a budget? Do you have a budget that you can actually enter in the system?
We do have a budget
Awesome.
that we can enter. I just
Okay.
don't do it.
Well, I actually don't spend time today going into the budgeting side of things, but I
Mhm.
would love to set up a follow-up appointment and sit
Yeah,
down with
that
you.
would be
It
great.
is super easy.
Is it?
Oh my gosh, it is. So it's like the chart of account. It's a built-in template. You can go in and just customize it to what you need. Once you
Mhm.
post it to the system, it'll start doing budget versus actuals for you on a monthly basis. Oh, it's fantastically easy. So you can go in and see where you're at from a percentage standpoint. It'll auto generate for you, and it is really customizable. The other part I like is if you do modification against specific line items, it will track it for you,
Okay.
which
that's
is
what we're
really,
looking-
really
yeah.
nice when you start to do the following year's budget cycle.
Mhm.
Because you can see the initial budget and then the adjustments, and in some cases you have more than one budget adjustment against a specific line item. So you can see where those hits were. It, excuse me, it helps you when you're doing budget forecasting too,
Mhm.
significantly.
It just
So-
seems so intimidating.
It's just like we were talking about consolidation, right? You're like, this sheer fear,
Yeah.
but it's it's been simplified a little bit more so with QuickBooks Online,
Mhm.
which actually has made it a little bit more user friendly, to be quite honest with you.
Okay.
Again, it's template based. So you can just go in and build it out to really what your needs are, post it, and then it just hits each of the GLs. So
Mhm.
it really, really does it simply. Does anyone else use the budget system within QuickBooks at all? No. Super robust, really easy to set up.
Mhm.
Well worth taking the time. You know, along with cash management, the key aspects of having a budget is to keep you on the right path,
Right.
right? The key aspects of managing a business and cash flow is ensuring that each specific line item is being addressed financially. And so that's why the budget is so important, and getting, especially the students when they initially come in, they get the concept of a budget, but they don't get the concept of sticking to a budget. Same thing we struggle with at times, right? But nothing's going to throw you off quicker than not sticking to the budget. And if you're not going to stick, getting them to understand that the dollar amount's not going to change, it just means that something else is not going to get the funding
Right.
that you want.
Mhm.
So again, the relationship then the understanding that you have with your business and what is taking place is key. We do have a question out there. I want to make sure I'm answering. Is it Nisa King? What is the difference between accrued accounting and cash accounting if the business is under $1 million? Should it be cash? So first of all, it should be cash unless your accountant is telling you it should be accrued or you're a CPA, okay? Recognizing those expenses specifically for a cash-based business right now, for simplicity purposes, cash is the way to go. Now, if we have a more developed and established company, and we are working with a CPA, we can utilize accruals, right? And the only difference between cash accounting, as in what is taking place on your financial accounting, and accrual accounting is when we recognize expenses and when we recognize cash coming in. Those are the two most significant differences, right? So that's why I say cash accounting, for small businesses right now, way simpler to do. You have a CPA that's telling you I should be doing accrual accounting, I'd be listening to that man. He's probably going to be saving you a lot of money, but don't try go out and do it on your own. Make sure that you're having, because accrual accounting can get a little bit complicated once you start scaling up. Okay, so running a $200 million budget, all accrual accounting, right? Just because of the scale of it, we had to, right? Otherwise, nothing. And we had a project-based system. It's this construction company basically that had projects in multiple different states. Keep it simple, guys. It's going to get complicated as you grow and become more successful. So for right now, I always recommend anything under that $1 million mark that you do cash account. Again, if you have a CPA, Nisa, give me a call. So what's going to happen with Nisa is we just need to draw a line in the sand to dictate when we want to shift from cash to accrual, right? We don't want to do the flip-flop thing back and forth. Not a huge thing to do, but we, again, just want to make sure all of that. It's a calendar thing. It's a time thing. A lot of what we do with the accounting at the larger level is a time thing. Absolutely a time thing. Always keep the calendar year in mind from a tax reporting and an accrual perspective, and those are the two key days, beginning and the end of the year, and everything else that happens in between. Nobody else I need to talk about accruing. No accounting in here? No. Awesome. Okay, money in workflows. Really, really, really important part of your business is getting your customers to pay you. One of the things I love about QuickBooks is the connectivity and the ability for the customer to receive that invoice and pay you right away, and it show up right away. I mean, gone are the days of opening the mail, going in, yeah, clear that invoice, go into the banking, post that. Who remembers those good old days? So much easier, so much more convenient. And it's weird, you know, the students I work with, they have no concept of what a paper invoice is and what's a check. How did you make those two to come together? Then you walk down to the bank. That's that same bank. I don't know how, you know, so it's a completely different world in that regard that we live in from that perspective. And so it also helps us from a cash flow perspective because we're not waiting when it comes to chasing our customers or receiving. We've either been paid or we haven't. And so when it comes to collecting from our customers, it makes it a little bit easier for us to stay on top of what we expect to receive from our customers. Conversely speaking, it enables us to stay completely on top of what our vendors expect from us. Okay, because again, paying our vendors is key to the relationship that we have with them, get better terms, manage our cash flow side of things. Anyone use sales receipts here? Don't want to go down past that. Sales receipts. No. Sales receipts. Anybody use any sales receipts out there? Most businesses don't these days. You know, and with the online system being the way it is, once that invoice is paid, they get a certified copy. I'm going to switch over to the customer side though, only because I just want to walk through one aspect of this. Yes. Oh, somebody does.
No, but I'm gonna stop your sharing and have you restart because it froze.
Wasn't my fault.
Wasn't. Go ahead and restart that.
Restart the Zoom.
Restart your sharing.
Okay. The reason I want to talk about this is I want to just talk briefly about the timing of payments that we receive from our invoices. So in most cases, when a payment comes in from a customer, we're going in the next day to the banking module, we're seeing the transactions that are taking place, and then we're posting them against the invoices that are outstanding and we're clearing them out the system. Making sure that we regularly do this and making sure that those deposits tied back will significantly help you when it comes to the end of the month and doing your reconsolidations. Now, I specifically pick a specific date and time that I do these on every week to make sure, because then I know when that posting hits exactly what day I did it on and what that deposit amount was for. You'll start to get patterns in what you do. Again, I'm speaking to this specifically because when you go to type things out at the end of the month, this will make your life easier. Okay. Those payments are constantly coming in, constantly at each side, making sure that they post and not having this huge differential between you post it in the system and then waiting will help. Don't wait a month to go in and clear out what's posted at the bank. Okay. Don't cross into periods, right? If it's the 30th of the month, make sure everything is cleared out. Because once you reconcile, once you close out that period, it will have an impact if you start going back into prior periods and trying to post against them. Okay, this is where time periods out is key. Too many times, and I'm going to speak to companies out there that have other individuals that work for them. One of the issues you encounter here, once you reconcile, once you post a payment and you don't close out a period, is if you have people that are working for you within your AR and AP departments, they can go back into those prior periods that you have closed out because they got an invoice that's 3 months late. Oh, wow, this is dated back in July. Let me go back and post it in July. Well, guess what they just did? Through your complete reconciliation, and guess what's going to happen? You're going to get to the end of the month and go, oh man, I'm off 60. Wait, not this month. Wow, it wasn't last month. It wasn't even it was 3 months ago. Okay, and you're going to spend 6 hours chasing your tail. Who's done this? Okay, because it happens all the time, guys. But the simple act of reconciling, locking a period out, right? You can still access it, but you need password access. That way they're coming to you and going, I need to put, well, why are we posting it? Oh, should we be? Well, maybe, should we? Maybe there's a justifiable reason, but at least you know. So that when you do get to the end of the month and you're like, oh yeah, we talked about this. Okay, these are the kind of controls that you can put in place. Simple controls, but it speaks to just receiving a payment for an invoice that we're talking about that's created all these issues. Process driven, detail orientated, right? Those are always our focus points when it comes to dealing with QuickBooks. As long as we're hitting those, you will address any issues that you have. But having the knowledge to understand that, not everyone's going to have it, especially if you do have an AP or an AR individual that's entering and processing some of these payments for you. These are some of the controls that you can have in place. We're good with that?
I have, yeah. question. You're not talking about just categorizing and matching, you're actually talking about another step, which is posting.
Mm-hmm.
Okay.
So receiving the payments and actually posting them in the system.
Instead of once you categorized it, matched it, and post it.
Right. So it should always be that three-step process. Well, after a period of time, and I'm sure you guys know this, the system will start to actually auto match for you. They'll just look for you to confirm it.
Oh, yeah, okay, that's where.
Yes,
Okay.
yeah, it will, absolutely, but yeah, it will. But again, more importantly, we're talking about time periods here and not crossing over, because something so simple can have a really big impact from a reporting perspective. Nothing drives me. I'd rather be out of balance by $30,000 than be out of balance by 67 cents. Do you know why? Because I can find $30,000. I mean, I really screwed up. You know what? You know what it takes to find 67 cents, right? And I mean, I work for the state, so there's 3 zeros after the point, not 2, just so we're clear. 3. And I have to tie out. I mean, it's just not a matter of not. And the same goes for you guys, right? From a tying out perspective. So again, simple controls that you can put in place. I mean, this is none of what I'm telling you is new, but how many times do I come in and say, oh yeah, there was 67 last month. Oh yeah, there was $4 last month before. It doesn't just go away. There's a transaction behind it. These are the things we're talking about, guys. And are they small? Yes. But do we need to understand it? Yes, we should, right? That goes back to the controls that we have in place. Good with that. I know it seems small, but it can really have an impact down the line. And I feel like what I do a lot of the time is just point out these small things that can have an overall impact, because people just don't realize it. Like the 67 cents I just said. Again, I'd rather be, I know I can find that. Okay. Let's talk about this. Let's talk about deposits real quick. All the deposits other than your banking deposit that we talked about, where your customer's paying you in cash. Is everything coming through electronic? Anybody see checks in the mail? Awesome. Okay. Wow, we're still doing that. Okay. And right now we're going in, we're doing the banking system, we're posting them against the invoices, and then we're doing the deposit remotely. We do desktop deposit. We go down to the bank.
Found out the hard way. I went down to the bank and
Oh.
stack a check and went, oh, these need to get matched.
I love me some desktop deposit. Well, the other part about why I ask about the banking part goes back to reconsolidation. I'm sorry, I keep pointing to you. The fact that you do it, I love it. Is that you want those to match, right? And so like my recommendation in those areas is specify a day of the week that you are going to go down to the bank if you're not using the remote desktop, because you'll know that fixed deposit when you see it hit at the end of the month. And when you do the reconsolidation, you'll know what I used to do every Friday. I put in, and I would know that deposit hit on Friday when I do my consolidation. Boom, oh, those big deposits on Friday. We'll move them to the bank. Because in amongst that, you still have all the other transactions taking place. And here's what starts to happen where it gets confusing. And I'm sure you know, whoever does it, they start to get like commingled. So I keep them clearly separate when I track them. I keep my checks separate. I do it as a single deposit, separate from the credit card processing, which I let go through every day to keep those two clear, right? Otherwise, it does start to get a little complicated. Also, only because of the fee structures associated with the credit card companies these days. I don't know if you guys, one of the biggest issues I'm encountering with dealing with a lot of small businesses is how to manage and categorize all the different fee structures that they have. And when you start to commingle them with the cash deposits being received, it makes a big tangled mess. So I try very hard when I'm structuring and setting these things to keep them, I mean, they're still being deposited at the same place, but I'm able to break them out from a tracking expense standpoint, because remember those charges are expenses against the business that we need to be tracking. But we do need to be tracking them at that vendor level so that we can reconsolidate it for everybody. So this is where it starts to get a little tricky from an expense standpoint, because not everyone perceives the credit card charges to be expenses and not everyone tracks them.
Like strike fees versus
Mhm.
Intuit fees.
Absolutely.
Yeah.
These are all fees, which are expenses to your business. Yeah. Again, we talked about capturing those expenses. So imperative. There's another one right there. Another Q&A out there. What? Oh, Nisa, I love, great question. What is the best way to reconcile the books? The best way is to use the app that is actually provided within QuickBooks. It is super easy. Everyone is so intimidated by this subject matter. I'm going to take 5 minutes telling you guys what it involves so that we're all not scared and we can all give it a shot. Okay. It starts with the beginning balance of what you had at your bank account and what your ending balance is. Those are the 2 points that QuickBooks wants to know. Now, if we've been doing this month over month, your beginning balance will normally tie directly back to what your bank balance is, and you're off to a good start. Right? Then it's simply a matter of going through each of the categories and categorizing them out to make sure they match what's in QuickBooks. If there's any differential in there, QuickBooks is simply going to tell you, we have a 50 cents differential here. We have an $80 differential here. And you simply need to go in and figure out, did I tag it incorrectly? Did I fat finger it? Possibly. Honestly, it's a learned exercise. The more you do it, the better you get at it. There's nothing intimidating. And here's the most important part. And I know everyone at this table knows this. You can't break QuickBooks. You can mess things up, but you can't break it and you can fix it. So anything you go in and go, we can fix it. But guys, don't go in and not use it because you're intimidated. Okay? Utilize it, try it. And if you have questions, guess who you can call? The SBDC and me. Okay? Honestly, you are going to have to get used to utilizing this part of it. It's one of the most important parts of keeping your arms around where your business is at financially. And here's the part. Here's the key part. We work inside the storm, right? The storm is around us, right? So we don't even see it at times. We're so hard at work. Where you are going to find things, where you are going to catch things, if they're taking place, is where you reconcile the books. Trust me when I tell you that. Because everything we do is a pattern of what we did the prior month. It does. It's just to what factor we do more or less, but it is a pattern of what we did from the prior month. And you will start to learn these learned patterns. And so when you look at a line item and go, ooh, X amount was there a month before, and the month before, and the month before, and that's why, and now X amount is not, what's going on? So you ask the right questions, get the clear understanding. And here's the best part, you haven't closed out the month. So anything that's broken or anything that was done incorrectly, guess what you get to do? You get to fix it. Not wait 6 months, not know what you did wrong, do a journal, and then make the same mistake again. Because that's what human habit does. Right? We put the Band-Aid over, we think it's solved, and 3 months later, we're dealing with the same problem again. I don't want to go too far without her. Any more questions? I will spend some time with you on the cash. We should set up an appointment.
Yeah.
I can do Zoom, I can do, and this goes for everyone here. I do Zoom, I do in person. My primary office is up in Slow, but I have no issue moving down here too, so. Okay, invoices and accounts receivable. So probably the most important part of your business is getting paid. Because if you don't get paid, your employees don't get paid, the bills don't get paid, nothing gets done. So probably one of the most important aspects is managing the side of accounts receivable, right? And that's the relationship between you generating an invoice for a customer for services or products that you're providing, sending that out and then receiving that payment back from the customer. The good news is, as I spoke about earlier, QuickBooks has made this probably as easy as possible to facilitate that. In that you can simply do everything online and the customer can pay you that same day and that deposit can show up the next day, which is fantastic. Did not always be the case. With that said, the one thing I'm going to talk about again here is credit cards. Okay. We all deal with multiple types of vendors out there. And every single one of them has a different pay structure associated with the fees that they charge. It is grueling having to deal with them, right? I've had ladies come in that just, have like 11,000 transactions that have come through from credit cards, where they have these large scale, it's an online business that sells all these little dinky things, right? But they have all these, and it's almost, it got to the point where she couldn't manage tagging them. I'm sharing the story just so that you can, from a scalability standpoint, what we were able to do. So what we decided to do, we did it as a monthly reconciliation, just credit cards, which is how this methodology of breaking credit cards out from cash deposits came. And what I would do with her is I would help her generate a spreadsheet that would reconcile everything, and then we upload it into QuickBooks. So instead of having to do all these entries to hit the vendor with all those multiple charges, we were able to push it into an Excel spreadsheet, break it out by the merchants, and then just push that back in each month, as opposed to sitting there and categorizing thousands upon thousands of these costs. Because as you well know, you've got to go in and you've got to make so it knows that it's a credit card charge, right? Well, I mean, imagine trying to do 300 every day. I just, and it's this lady at home doing it online. So again, the key part I'm trying to convey here is making sure that we're capturing and tracking those expenses, right? I know it seems like a lot at any one point in time. It's just coming up with the correct game plan. A lot of the credit card systems will send you a monthly report now with that total balance. I actually use that balance to reconcile everything. It makes it super easy if you've got the merchant vendors that are charging you broken out individually. Which 6 of them might go in and verify each 6 of the charges against you. But it is key because it means that you're capturing the expense in the right place. Because if you're not, where's it hitting? Hitting that customer, and it's hitting your revenue and your cash side of things. So again, it may seem small, but when these card companies are charging you 2.5%.
So QuickBooks doesn't have a feature, I forget what they call it, where you tag it and it automatically.
It does, but you got to go in.
You still have to.
You have to until it learns for that specific customer or vendor that you're dealing with. But it's a separate line item in there because it doesn't see it. It's not because if you capture it in one line item, you're not going to be able to break it out as an expense against the credit card company. It's just going to see it against the service or whatever. The other part about it is when you send that invoice out, it's not in there. So the system doesn't have it categorized. It's not like when you send the invoice out, you've got another line item with 3% Venmo fee or whatever that fee is built into there. You don't. So the system has no category for it. But when it comes back, that payment comes back, it's less that amount. So if I build in for $100 and there's a 2% fee, I'm going to get $98. The system's going, show me $2. Every invoice you ever have is going to be right. But what's the offset? The offset is that next line item, which is the expense against the card. That's what I was trying to say. She was having to do that many times. So I bring this up specifically because you want to make sure that this is an area that tends to be a little bit of an area of weakness because we normally just consolidate everything into it instead of breaking out that expense at that line item. Now, they're both expenses in the system, right? But that credit card fee, right, is an offset. Right? Because it's not tied to the service that you provide to the customer. It's tied to a fee to your business. You get to pass that on, but you have to track it and be able to break it out. Right. Real clear on that? I know.
I'm thinking about the ad you get from QuickBooks that says open up a such. I'm wondering if they just, here's your 1 month statement instead of, every day you get these. I'm wondering if that's why they're pushing.
I'm
their
sure.
Products.
Absolutely.
To do that.
Absolutely. Absolutely. I mean, everything for them is from a consolidation.
Yeah.
Perspective. I mean, where our world that we live in is in the granular detail, guys. Everything's in the granular detail. The more that we can break it out, the better the reporting that we can generate to help us forecast as we move forward. Invoices and accounts receivable. briefly, the key area that I want to touch on here is if there's any other added expenses associated with you receiving this payment. So specifically, the big ones are credit cards, right? I want to make sure that when we're receiving that, and if it's a check, I know, go in, check, boom, done, great. But when it is a credit card, making sure that we're capturing that expense, right? We all know how to get a payment from a customer and apply it against an invoice, but making sure that once that transaction is complete, it is categorized correctly, that we're capturing that expense associated with the credit card as the offset. Otherwise, you get to the end of the quarter, end of the month, and you're reconciling, and every single payment that you received in is what? It's off. And I've had it. Wait, what? Really? Those are charges?
So we're quick, 9 months into this, we figured out you could toggle that. You could toggle it so that the vendors will only pay with check. And
Yes.
the-
Yes.
And so for anybody who doesn't want to deal with that, just toggle that off, and then
you
you
don't-
don't have to they can still invoice you electronically.
Yeah.
It's just what they do with QuickBooks, the checking account.
Correct.
Yeah.
Correct, and it's right away too.
Yeah. I just thought of that.
Love big money. I know. We're good with that part from the credit card receiving, processing payments against credit cards. Invoices, receive payment. I'm not going to spend too much time showing you how to do it and turn it on. Most of you know. I'm going to do the reporting though in a bit. Let's talk about suppliers and expenses. How many of us out there from a service base deal with multiple suppliers? Anybody else dealing with multiple suppliers out there? Okay, so we have them set up as vendors in the system currently. We can briefly talk about purchase orders here because this is where they'll start to come into play from managing a budget perspective. And so let's talk something simple like cleaning supplies. Okay. The idea behind a purchase order is it structures a line item or a subcategory within your budget, and you can only tag against that specific line item for a period of time, only 12 months, or depending how long the project is, right? You guys dictate how long your budget runs, et cetera, et cetera. The nice part about POs is it makes it anyone who is working for you to tag that invoice against that PO and work with that vendor within that dollar amount, okay? Now, as a rule of thumb, you always want to make sure that you are monitoring your POs on a monthly basis. As an example, I have a $100,000 cleaning supply PO open. I'm 3 months into the year and it's $70,000 spent down. Well, Houston, we have a problem. Okay, something's either not taking place, something has been overexpensed, or something has just been categorized incorrectly. But the idea behind the PO system is it gives you the flexibility of the supplier knowing that you're going to take a certain amount over a certain period of time without having to go back and readjust a line item or without having to get the approval. More importantly, once the PO is established, it is generated and given approval for that vendor to go back. The only part that you need to make sure is that you're overseeing the PO on a monthly basis. And you can run a PO report out of QuickBooks, which will list all your POs out there and the percentages that they spend down, right? This way, you're able to manage both from an inventory, if we're using the inventory control system, and an ordering supply side of things, the PO system helps you manage that, right? More importantly, if you are to go over budget on any one line item, the PO has to be revised. And for the PO to be revised, it has to go back through management, be modified. Everyone is fully aware of why it was. This also helps you when you start to do budget forecasting for the following year. You already have an idea. And remember, we're trying to save money and be frugal in the way that we go about it. But even if we assign a PO at $100,000, it doesn't mean necessarily that we're going to 100% hit that 100,000 mark. The vendor has that expectation, which is the expectation we set, but ideally we're going to save some money there. Trust me when I tell you, the vendor far prefers to have an idea of what they're expecting, you are expecting from them, than for you to just push orders out to them constantly. Right? It really does. And PO orders that have a relationship with vendors tend to have a priority in their system in regards to how they service you. So those tend to be the orders that get filled regularly, right? Most purchase orders are tied to monthly renewals. So, we have a purchase order there, 100,000 cleaning supplies each month, $12,000 of cleaning supplies are coming in. That order, but all of a sudden next month it's 24,000. Well, why is it 24,000? It's going to push us over budget. Right? So again, simple tools, right? And I don't know if it relates to where you guys are at right now, but simple tools, setting POs against specific line items. I'll give you an example. I run 2 buildings. The cleaning crews drive me nuts. I have two different buildings. One comes twice a week, one comes 3 days a week. I'm not counting guys. I'm not running buildings. That's what I have. I have 2 POs for those cleaning crews. I get an invoice from them monthly showing them coming 3 times a week for one group, and I go, yep, that matches. Sign, pay, done. Right? For me, that really helps me. And then the other cleaning crew for that other building, they have their own PO that I tag against. Right? I got a bid at the beginning of the year. The budget, it doesn't go over that amount. I know what I expect from them, so on and so forth. Simple tools that you can use to manage your relationship with the suppliers and your vendors out there.
Okay.
I know everyone here's purchasing. Oh gosh. Again, we've gone through reconsolidation, we've gone through the balance sheet, gone through all the big ones. They're not that scary. They're really not. Vendors love working with POs too, just so you know, guys. It makes that relationship that much better when you're working with a vendor on that level. We good with that part? Okay, let's jump into the learning part of this module. So a couple of things we're going to talk about. Adding suppliers. I'm going to spend too much time because I'm going to tell you the same story that I told you about customers. Important to take the time to make sure they're set up correctly, that we have their W-9 on file, that we have their correct address, correct zip code. Okay, really important. Nobody, so question here, I'm not going to go down this rabbit hole unless anybody answers yes to this. Do we have anybody that use sales tax flow through scenarios with any of the businesses that they deal with? No.
What do you mean flow through?
So, good question. Best way to answer it is construction companies build a house for you. Right? They buy the wood from a company and they pay sales tax on that. Right? They build your house, you pay him and you pay sales tax. That's called double sales tax.
Right.
To stop that from happening, the builder can ask for a sales flow through, which means it goes to the state and says, I'm buying this and I'm building it, but he's paying sales tax. Why is this nice? Well, lots of vendors like bonds. Okay, if you're dealing in products, this is what they do. They don't pay sales tax on what they put on their shelves. You come in and buy it, you pay the sales tax. That's
Call it a
required.
resale certificate.
Resale
Yes.
Yes.
To your question.
Okay. Okay, so that is key when we comes to setting up these suppliers, because there is a box in there that specifically states that, and you also have to have that W-9 on file. Because within that, there is a section there that they are reflective of the liability that's being given up. It's really important that you have that on file. Now, the reason I bring this up from a resale certificate perspective, you can get audited. I have been audited. When the BOE show up, they want to see them. They want to see them now, and if you don't, the penalty is pretty severe behind it. You have to $15,000 per occurrence. So, yes.
So you want to be clear here, you're talking about someone's buying a product from you, claiming to be hold a resale certificate.
Correct.
You need to have their W-9 or their certification on file.
Correct, you do. Right. Their word is not good enough. They need to produce the document only because you're liable if you don't have that document.
What about the pass-through though? What about, let's say, your bonds? And that's a bad example. For example, we have a situation where we do
You
value
can
add a gift, and then it's a gifting business she has, and then we sell to a hotel.
Okay.
The hotel collects sales tax on their end. So what's our
So
requirement?
you would just have to have resale certificates with those vendors that you're dealing with from that
Okay.
perspective.
Okay.
That's all you
That's
need.
it.
That's it. And you just need to have them on file, but you have to have them.
Okay.
That's the rule, because if they knock on your door
Yeah,
and you don't, it's on you,
Yeah.
and it becomes a sizable amount. So I don't necessarily like to go down this rabbit hole unless there's
Yeah.
specific business, but you want to make sure if you're utilizing resale certificates that you have them on file, they're up to date, and you have to do it yearly. Make it part of your annual process to update your resale certificates, right? Behooves you in that department. So key aspects of adding suppliers, resale certificates, touched on those key areas there, making sure we've got their correct zip code again, same situation as what we talked about earlier. Nothing too fancy here. I'm not going to spend too much time. It's pretty much exactly the same as the customer. One thing I do like to do and mention here, and this is just me personally, I created a supplier form when I dealt with supplier. I had a one pager that I created. You can go online and create it, right? And I would have them complete it. And there's that paper clip at the bottom of when you add either a customer or supplier. I like to attach that document right there. That's also where I store my W-9s. Because if you don't store them electronically and you have them in the office, they have to be under lock and key. The DOE show up and do an inspection of your place for the resale certificates, W-9s have to be under lock and key. Just small things you want to be aware of. Okay. You can, on the supplier form, I would just have them complete all the relevant information and attach it in there. Okay? You don't have to do it. I'm old school, a little bit old school in that regard, but it would have all the contact information, all the relevant information that I needed above and beyond what is asked of the supplier in there. It's just nice when you're dealing with supplier, you know, you need that W-9, asking them to complete that form, gives you all the relevant information that you need to add them to your system correctly. Otherwise, what ends up happening, guys, is just sending it to you in an email. Oh yeah, here I am, look at my signature. I get so much of that. No, you need to know who we're dealing with here. What's your email address? Who's your contact department? If I have a problem, who do I get in contact? All that information should be on that form, right? Because trust me, it's gonna happen. And when it happens, you're gonna be, darn it, I can't get hold of him. Who do I take the time? I know these things seem so small, but they do add up from these standpoints. Because trust me, when you run into a problem, it's the last thing you want to be dealing with is trying to find someone's number or email address. Okay, accounts payable workflow. Man, we have spent some time already talking about accounts payable workflow, but let's talk about paying bills and what it takes and what the process that we use. So in most cases, right, the part from a cash flow management standpoint that the biggest liability you're going to hold is going to be the payroll side when you deal with your employees. The next part of that is going to be dealing with your vendors and managing both of those sides. Now, we don't spend too much time going into payroll because it's set up and structured differently, but understanding what it takes to pay your vendors and pay those bills, whether it be the utilities or the vendors that you're dealing with, to manage your business is key. The best methodology is what I recommended earlier. Running the report each week through your reporting manager within QuickBooks to know what your accounts receivable looks like. Forecast out your 7 days, have a clear understanding of what you expect to receive in those 7 days. The other part about that is be realistic. Okay? When you're looking at cash flow management, there's a risk assessment that's done. If you know that that client has always paid 2 weeks late, then guess what? You're not getting it in that way. Okay, you need to have a realistic risk expectation of what you expect to receive in. Conversely, this gives you the assessment of what you can pay out, right? And understanding what that relationship, because there are ebbs and flows to our business, right? We all know that. There's a busy time to the year where our cash flow becomes thinner, and there's times of the year where we do not have as a harder time with the cash flow management. It's these kinds of aspects that we're trying to even out. Right, in the manner that we go about this and managing those relationships with those customers in this manner, making sure that we are paying our bills on time, that we are managing that relationship so that we do get better terms is what is going to help us from a cash flow management perspective. All these little things that we've talked about today are at the core element of what it takes to take your business from the beginning stages to the intermediate stages to that next level. I could sit here today and I've shown every one of you how to process an invoice, how to create a bill, but you all know how to do that. It's all these other little things that we are talking about today that are the fundamentals of building a successful business. And the thing about it is, you don't know unless you know. The reason I'm sitting here and telling you guys is I've been doing it a long time. I've worked with multiple businesses from tiny little companies up to really big companies, but the fundamentals don't shift. They're the same, whether I was speaking to a board of directors or you guys, the fundamentals to run a business and what it takes are exactly the same. They don't shift. It's just the scaling side of it, right? So when we talk about the diligence of reconciling each month, looking at your bank account, guess what I do with Cal Poly? I look at the bank account each month, right? I report it to the dean. I make sure that everything ties out because that's what they're looking for. Same thing. I'm running a business too, right? We're doing the same things day in, day out, and I run into the same issues that you guys run into. It's just scaled differently. So keep that in mind. It really is not that complicated, right? But it is very much about having an understanding of what's taking place. And here's what happens with understanding. With understanding, you gain the knowledge of knowing what you don't know. Think about that for a second. What I've taught you today is actually more about what you don't know than you do know. right? Because here's what starts to happen. You're going to start to ask questions around a lot of the things I pointed out today, whether it be the credit card, because I saw a lot of you go, am I capturing that? How am I, this is what starts to happen. And here's what's going to happen. You're going to come back and go, well, we're doing it here, but we're not doing, should we be doing? But you weren't asking that question before. So realize that this is a lot of this is a learned practice, right? And that's why we repeat these classes over and over again. I do it 2 or 3 times a year to cycle through because it does take time, right? And again, don't be afraid to come back to the beginner's class or more advanced class once we get there. But again, this is a learned process that we're going through. Any questions from before we jump in? No? Okay. Not going to spend too much time on cash transactions only because we have one individual. I would love to sit down with you and we can spend some time going on the best methodology to use for you in those regards. I encountered this a lot, just so you know, a lot of the individuals I deal with still deal with both cash and the digital transactions. I have a lady who sells flowers at the farmer's market. And for years, she has this cool little app, but people still just want to pay her with cash. And she's like, I can't get past it. So what do I do? You know, I'm walking around with all this cash every night, blah, blah, blah. So we had to come up with the whole process for her to facilitate going to all these little different farmers markets and what have you. I'll share a great story with you. She was an SBDC client that came into struggling during COVID. And basically didn't have she would go to all these different farmers markets. She's like, you know, I do great, but I never figure out which one I'm most successful at. So we set QuickBooks up and we created 3 different projects, the 3 different farmers markets. We built out all the flowers that she sold. And so for 3 months, we tracked it. She'd come in, she'd let me know. And we figured out that the Pismo one was her most popular and most profitable, but she got the most transactions at the Avila one because of the sheer amount of people that came through. And she was able to shift her business model in the way that she focused on certain areas. Long story short, she bought a farm last year.
Good for her.
Out in Pomo, and now it's growing. She was renting a farm before to grow these, but now she's growing it all herself. That's the stories we try to tell. Those are the kind of things we're trying to do for local businesses because we don't want them to leave here. We live in paradise, guys. Why would you want to leave? There is this perception out there that to be successful after you graduate Cal Poly or in general that you have to go to LA or you have to go to San Francisco. And our model is stay here, grow your business, generate jobs here. That's what we're trying to do for the local community. And that's what the SBDC's role is in all these local communities that we work in. So sorry, a little off track there. But cash is still out there. It is still a transaction we have to deal with. I deal with it on an individual basis only because it's kind of unique to what people deal with within QuickBooks per se. Checks are pretty straightforward. We get them in. I'm sorry we still have to deal with that, but it's still the world we live in. At least we don't have to print them. Does anybody print checks here? No? Anybody remember those days?
You mean prevent
Mhm.
to pay? Yeah.
You still do print? Really?
Yeah.
Wow.
We do.
Check and a little bit of cash. We don't even accept any credit cards at the moment.
Same here.
Really?
Yeah, we haven't.
Wow.
At all.
It's same
Yeah.
here.
It's pretty, okay. Well, that's something we can certainly work on
Yeah.
for you guys. Oh, really? Wow. Okay.
It's
Well,
just-
we should meet. We should definitely sit down because I can definitely help you. And same with you guys again.
I mean, sometimes pay us $18,000. Some only pay us 500. It depends on. We don't know the fees exactly. You know.
And see, that's part of the issue is
Yeah.
the lack of insight
Yeah.
into what is taking place in that macro. Because the problem is, it's like I was explaining earlier, you're billing at 100, you're only receiving 98. You're like, okay, where is it? What do I do? How do I, right? But it's still an expense against the business. Now, just take that number and factor it out by how many invoices you have. And we're talking about a sizable dollar amount that we're not capturing. That's part of where this issue lies. Now, some people are, right? If you've got it structured correctly to capture it, then you're great. But if you don't, we're all good with entering bills, but with that said, I do want to spend a little bit of time about entering bills only because it relates back to something that we talked about earlier, which is itemizing out expenses, right? And making sure from a category perspective, we're hitting the correct category codes. Now, most of us, when we're dealing with vendors out here, we're getting this nice consolidated statement that comes in, right? That we then enter in the system. Are any of us processing the payment first and then creating the offsetting entry? This is something that I've seen recently taking place. So as an example, your utility bill automatically draws out your account. A lot of businesses this month, what they do is they come in, they go, well, there's no bill for my thing. I just see them taking my account. I'm like, no, they sent you a bill. You just didn't take the bill and put it in the system to match it up. This is what I'm talking about. Okay. And it's lazy accounting is what it is. Okay. So nothing will get you in trouble quicker than lazy accounting. I know it's a bill, guys, and you know it's going to hit, and you know what the entry in the system. Make sure the utility is hitting the correct category line. Okay. Because here's what happens. You don't enter the bill. You see it come in and you go in and you just create an offsetting entry to wash it out of the system. You're not capturing the expense in the correct category, right? It's not hitting the correct line item. Okay. It's lazy accounting.
You need to add that just like you would have.
Absolutely. You need to add it. And more importantly than just the forward, but is to add it and make sure that we're hitting the correct category codes, right? So let's just do something simple. Choose an Amazon. We've got 10 items coming in from Amazon. We've got this invoice from Amazon, and we start entering in the system. And the first line item is it's cleaning stuff. I've got stuff for cleaning today. I don't know what it is. My wife's gonna love me. It says 10 line items of cleaning solution. The next line item is towels, and the next line item is paper. Right? Well, in most cases, you would just put it in, you categorize it, boom. But all three of those should be hitting three different categories.
Yeah.
Not one, three. Paper, supplies, and materials. Cleaning supplies is the things. The towels relate to the restrooms and how you want to structure it. In our minds, we're just going, slides of material, click. And when you run a nice big report, guess what it's going to say in that report? Supplies and material. And what are you going to know? Nah. This is what I'm talking about. Okay. And this is where we talk about item coding, where we've built out all the items within the system that we can tag it against to know where it's specifically hitting and what GL code it's associated with. That way, when you run that report again, instead of just saying supplies and material, it's going to say towels. It's going to say cleaning supplies. It's going to say, whatever else, coffee creamers, whatever else is, so that you have a clear understanding of what. Oh my God, we're spending $1,000 a month on coffee. Wait, before it was just supplies and materials. I didn't realize that. What the heck? Joke? No joke.
We're in Switzerland.
$500 a month in kombucha. I mean, like, it was just in the sale. When we did like $500. Yeah. Itemized out. Now I see it. Other before it's just put together as one lump. Right. And it just looks like we're only spending $2,000 on supplies and material. Well, 1,000 of that was to coffee. What the hell? You laugh, guys, but trust me.
Yeah,
trust me. This is how it happens. Right. This is exactly how it happens. And the thing is, as bosses, we sit back and we go, well, we can run a report. It'll give us the answer. Yeah. If things were done what? Correctly. How do we know they're done correctly? Well, I'll tell you how. Reconcile your books, because guess what she would catch at the end of the month? That everything was dumped where? Into supplies and material.
Right.
And the line item against that budget would be off because she hadn't broken them out. How else would you have put it unless you specifically knew to look? Processes. You could know your company backwards, but she ordered 4 cases of cleaning solution. Oh, great. Wow, that's no big deal. Run at the end of the month. Darn it, man. That's like 3 times what we normally spend on supplies and material. That's how you're going to catch it, guys. Right? And the thing about it is it just takes like 3 of these little things that we're talking about from an entering the bill perspective, right? And we're off. Right? And we're off big time. Right? And we talked about the 67 cents earlier. This is a way bigger issue. It starts to create way bigger issues for you within the vendor because now As you know, with vendors, you're constantly dealing with invoices coming in and out. You got to go back through and figure out where you messed up, where it's not taking place. There goes another 6 hours. And we've all, anyone that's done it sits here and goes, oh yeah, oh, yeah, yeah. It's brutal. Do it right, guys, the first time. Take the time, take the effort, make sure it's set up correctly. If you're bringing on new personnel, train them to do this correctly. Walk them through it, have them shadow you, okay? You will make so much more work for yourself if you are not doing this correctly. And these are the areas that I see the most weakness in, because it's just so easy to dump everything into one line item. I get it. But if you want to grow your business and understand where you're spending money and where you want to allocate money, it's these kind of things that are going to give you the granular detail. And that's what it takes for a business to be successful, is to understand exactly where the money is going. Conversely speaking, this is where the cash flow starts to tie in from the other side, right? Because you're managing it more closely, which in turn should provide you more opportunity to reinvest those funds back into your company, which helps your company grow because you're running lean and mean. These are the things that we all have to have an association that all successful small businesses have. All these small little things converging together. And it's a constant battle, guys, right? You're not going to do this 1 month and go, woohoo, look at me, I did it, we're good. Nope. That's what I told you in the beginning. You're going to repeat this every day, every week, every month, every year. And after a couple of years, you'll have a great, successful, sound business. The premise is not hard. The hard part comes in making it repetitive and getting people to buy in, right? I sit here and I tell you this, you see the value because this is your business. When we work with other people, they don't always see that value in the way that we go about doing our business, the diligence that it takes, right? You guys notice that I haven't spent much time on the line items and showing you because I know you know that, right? What you guys are asking me for with QuickBooks right now is how to take that next step with my business. What questions do I need to be asking? Where do I need to be looking on a daily basis? That's the information I've given you today. When you look at this guidebook, right, and look at those questions in regards to what we've talked about today, you're going to have the answer to every single one. The reason is the questions we posed today and the questions we've answered today, right? This is that next step. And understanding what it takes to take that next step. I throw a lot at you guys in these classes. So sometimes when I get the glassy eye look, I'm like, okay, take a step back. How are we all doing? We good? Yeah. Really, what you're starting to understand more and more is it's so much about the management side of how we interact with QuickBooks. What does that look like? What processes do we need to put in place? And I will tell you, I'm a very process-driven individual. So I have processes for everything. And I expect that of individuals. If you want to train an individual correctly, have a process, have it documented. And when you train them, show it. And when you're walking past it to learn to have that in process. That's how you teach accounting, QuickBooks to be done correctly. Have processes for what you're trying to achieve as a goal. Okay, do it for yourself. I create processes for myself. Do you know why? Because one day I'm not going to be doing this, and somebody else is. And here's how you do it. And they come in, they take my process, and they go, "He's an idiot. You can do this way better." And here's how I'm going to do it. And they will. And then we repeat and we repeat. And that's how you start at the bottom. And you work your way up to the CFO, right? And along the way, you build processes. So that's how successful business, that's how the billionaires of the world work, right? They identify, they assess, they come up with a process and they repeat and they repeat and they repeat. But it's process driven, and you need to have a process for the things that we're talking about. All the things we've talked about today, the reconciling, they're all processes. They're all processes that are on your calendar, that are scheduled, that you have a clear defined expectations of. Your book should be closed out no later than the 10th of every month. There's no excuse, none. Okay. I had 5 days to close out our budget when I was at RSC, and we reported to Duke Energy in North Carolina. And that was 13 states, and there was 3 people, right? Prior to Duke buying us out, we had a 15-day close. It was great. Come in, make coffee, be done by the 11th, report to the CFO. No, 5 days, because they could do it over there. They expected us. We got it done. But you know what got it done? Processes. It's the only way you're going to deal with some of these things that you're coming into place with. Because if you have the processes in place and then you're doing the review and the reconsolidation and you're going in on the weekly basis and daily basis to your banking, any of the things that are going to slip through, you're going to be able to capture. You're going to be able to deal with without waiting for it to happen. Without having to go back next month and go, oh crap. Okay. And those are the things that you're going to run into from a hurdle perspective. They're going to impede your progress to grow your business. So let's put processes in place to prevent that from happening. QuickBooks does an amazing job on the accounting side of things, but the process side is on us to set those up, to hold ourselves to those diligently. QuickBooks does everything else for us, right? It's the human side that we have the biggest issue with. So the best way to do that is to build processes around everything that we talked about today, whether it's reconsolidation, whether it's the weekly process, whether it's posting checks against invoices. Have a process, make it clear, make it defined, and document it. That is your best path forward. And the thing about that that's great is you're actually opening yourself up to the teams to say, here's the process. This is not stone. Tell me how we can make it better. You make it about your team, right? And then you know what they do? They buy in, guys. They're invested, right? This is how you build a business. These are the fundamentals that it takes to get them. Because how you perceive something and how they may be different, but you're trying to achieve the same goal. And always be open to improving a process, right? Because they may see something that you're not, because they deal with it at a granular level every day. Right. So again, these are just little things you want to make sure that you're incorporating into your business as we move through. We talk about the intermediate part of this, right? Well, the intermediate part is learning to manage QuickBooks. We've got the setup side. We know how to run it. It's managing now, because before with QuickBooks Desktop, it was just the desktop. It was an invoice coming in. I printed the invoice. It doesn't work that way anymore. You have so many intersecting points of data coming in that hit QuickBooks, whether it be the customer, the vendor, the merchants, so on and so forth, that it literally becomes about managing that side of it, right? It almost becomes like a CRM, like a client relationship manager for you, which is in many ways from the non-accounting side, what QuickBooks has evolved into when you think about it, right? It just has the accounting platform overlaid on top of that. So keep that in mind, that all the successes you're going to have are going to be driven by the processes, and they're going to be mistakes. And they're going to be mixed up. And here's the part I said in the beginning. You can't break it. I promise you, I have done my best to break QuickBooks. You can't break it. I have tried multiple times. So, let your employees learn. Let yourself learn, right? Try some of these things that we've talked about today. Step outside that comfort zone, right? You're not going to break it, but it is going to help you grow and have a better understanding of where your business is at and what it's going to take to be successful, right? New things are scary. I totally get that. But you do need to open yourselves out, especially with some of the things that are provided to you in QuickBooks, because these are fantastic tools that you perceive in your mind are so intimidating. They're not. They're made for the masses, right? And you have an abundance of resources that are willing and absolutely able to help you guys out in that regard. We good on the accounts payable side. Yeah, awesome. Okay, where we go? Cash transactions. So I'm going to leave this alone because you are my unique individual when it comes to cash transactions. Like I said, when we sit down, I will come up with a plan for you in regards to the best way to go about it. Not going to go through the whole. Last chapter. Learning objectives. Not going to spend a whole lot of time on the chart of accounts. I'm guessing by this point, most of us are very comfortable with our chart of accounts, right? I spend a ton of time, just so you guys know, in my very beginner session on how important it is to make sure that your chart of accounts is set up correctly to you, okay? I'm going to give you this quick story because I like to share it with everybody that I meet. I've been teaching this a long time, not just QuickBooks, but accounting, etc. And the biggest issue that I always encountered when I would meet with people and companies to set up QuickBooks Desktop was chart of accounts. And the reason would be that I tried to, chart of accounts is really the structure by which all financial transactions move through in and out of QuickBooks. And so some people's perceptions in the mind eyes when you show them a chart of accounts for the first time is they want to put everything in the kitchen sink. So I had this sales guy, he was building out his business. He had sales guys in every state, and he was going to, he was in 13 states and he was going to be out into 27 states. And he decided he was going to build his entire chart of accounts out for the next 10 years. He was going to check where his company was built. And long story short, he built like 6,000 and something line item chart of accounts. This insanely massive, of which he probably used like 5%. What's unbelievable about this is it makes so much more work for you when you build your chart of accounts out in that manner. So my one point about chart of accounts, keep it as concise as it is to your business. If there is something in there that you do not use, do not delete, deactivate. Okay, we're all clear on why we do not delete out of chart of accounts. I only see one person know that. I got to make sure that everyone is 100%, because honestly, guys, this is what I get called them when I do forensic analysis on accounting. This is the number one thing that causes me to have to come in and look at businesses. Okay. Once you establish a chart of a line item in your chart of accounts and you post something to it, you can never delete it. The moment you delete it, you delete every transaction associated with that chart of accounts. Here's what you can do. You can deactivate it. Still exists, right? Won't see, transactions remain. Here's what happens. End of the year, CPA wants to do your books, you consolidate it for him, you send him the CPA copy. He goes through and does his, and then he goes, oh, I'm going to clean it up for you. Not having the knowledge base or the understanding on the other side. I'm going to create 2 line items for this one chart of accounts for you so we can break it out and track it at a more granular level. And then I'm going to delete your old one. Here's your chart of accounts back loaded up. What the action just took place. Now you guys are going to say, that's a CPA, you should know better. A CPA is not an accounting class. Everyone sitting at this table is an accountant. Do you know why? We work it and do it every day. Okay? That's not what a CPA does. Okay? It's not. He looks at it from a completely different perspective. He's the guy in the know, but not when it comes to your QuickBooks. And this has happened. I'm telling you this as an example because I have seen it, right? And it is the hardest one for me to come back from because once you delete that line item in there, there's no historical data. You literally have to go back and find everything that you posted against them. And back in the old days, you know what? That wasn't a big deal because I go into the filing cabinet.
Yeah.
Right. Not anymore. Don't work that way anymore. Right. So keep that in mind when it comes to your chart of accounts. I literally bring this speech up every time I run this class. We deactivate, we do not delete. Right. Addings, no problem. Make sure that we're doing the same thing we talked about when we're dealing with the vendors and the customer. We're taking the time to make sure they're structured correctly. We're tagging the correct GL line item in there, etc., etc. But no delete. I can't tell you how many headaches and how many hours I've had to spend because of this one issue, bar none. Everything else we're pretty comfortable within the chart of accounts, managing the lists within there. We've talked about that really, really briefly. Again, I can't reiterate this enough. Keep your chart of accounts as concise and as direct as you need it for your business. Build it out as you need it. So don't be afraid to add a line item. But understand that when every time you're adding a line item, you are adding another line that you're going to track against, right? Within the system. So again, the other part about this, use your subcategories within these, right? It will help you still keep your chart of accounts really concise, but you can certainly use subcategories on certain line items. As an example, supplies and material. You could break it out to bathroom supplies, house, cleaning supplies, whatever it may be, but you can use subcategories within these to break these out to not have to expand the actual chart of accounts. Good. Pretty straightforward there. Let's see what other. I like to do like these. Reoccurring transactions. Reoccurring transactions. Fixed transactions coming in. Do you process them directly against your credit card or your banking account? Do they post against the system or do you have it set up?
Automatic.
Onto the bank account, and then you just post it against the invoice?
Yeah.
Okay. So those are the kind of things that you could set up within the system as well as recurring invoices to post against certain transactions that are coming in. The tricky ones are things like utilities, right? Where you don't know what the dollar amount is and you literally have to wait for the bill to come in. But there are certain transactions, most of the things like subscriptions that you can set up to prepay automatically, right? And that makes it really easy when you do reconsolidation on a weekly basis as well, versus speaking when you're dealing with it on a monthly basis. Custom form styles for sales forms and templates. This actually goes back to the same templates that we've talked about when it comes to things like invoicing your customer, right? Making sure that you have your own invoice template set up. Making sure that you have the relevant information out here. Here's something that I see quite a bit. QuickBooks Online, lady in my salsa lady in slow. I have this little old lady who's been making salsa in slow for 20 years. But where was I going to go with this? She would generate an invoice out of QuickBooks. We got her all set up on QuickBooks. Amazing little lady. And she could invoice out to all her customers, right? And she would always say to me, I send the invoice out, but I never hear back from them. And I'm like, well, why don't you come in? Let's take a look. And she's literally got her name and her address. And that's it, on the invoice and the dollar. And 20 jars of the salsa. And I'm like, well, how did they contact you? And she's like, well, they have my address. This is like a 72-year-old lady, right? So in her mind, she's like, they write me a letter, or she has nothing on her invoice. So I said to her, if someone has a question for you, how do they reach out? The same goes for you guys. Have your contact information, have your email, have your logo. You're branding yourself every time you send out an invoice to a customer. Guess what they look at? They go, ooh. Guess what's going to happen if they can't pay, or they have that question on their invoice? They're not going to pay you. But if your email's there, if your Slack's there, if your telephone number's there, hey, I was wondering, line item 3, customer sales support, right? Make it easy to facilitate the customer's payment to you. Simple little things like making sure you have this information on your invoice templates when you get out. Needless to say, we added it and she's good to go. But it's these kinds of little things that you can do to help yourself market and make sure that they're set up correctly within the system, right? Again, tons of templates out there. I don't know if anybody's actually done this. You can go in and look at the custom style templates, modify them, add your logo, and pretty much do whatever you want with it. Take the time, guys. Sure.
If we could do progress invoicing. So say we switched from desktop to online, and we've been kind of struggling with the template. The desktop one showed on the invoice what we billed them prior to what percentage, what we're billing them now, and what their total billing is.
Okay.
And online just does not, I
No.
cannot find that function. And then recently I called into the helpline, and they did have it kind of at the bottom, but it's not broken down into percentages or anything.
No, it's milestone. The problem you have is that on desktop, they did have, so construction companies, we do progress billing. So we hit right, but the problem with online is it has milestones. So milestones are specific designation points along the way that you can designate when you set the project up. There is a methodology that you can use for progress billing, but you have to use the project-based system to do it.
Oh, shoot. Yeah, we're not doing that.
Okay, so when you do the project-based system, you're hitting each project directly, right? As the bills come in each month, so that at the end of the month, you are doing strictly progress billing on what has taken place. Online does not have the ability to do that. Yeah. Now, if we set up the project system, we could do it within the project system, but we would have to do each one as an individual project to be able to hit it.
Yeah, I researched that and there's no going back.
Okay. Wow.
Yeah, so you can't go from the customer base
No.
into project and back if it's not working out. It pretty much just wipes out.
That is wild.
Yeah,
That's insane.
it's scary.
That is really scary.
We've been in business for 60 years, and so we have all these clients and customers, but if you switch it, there's something that the project one didn't have that we needed, so we don't do progress billing for all of our projects.
You know what? Something's not right with that. That just. I'm actually going to into a conference. I'm going to get you my card. Can you email me that? Because there's something not right there. There absolutely should be a way for you to do that.
It makes more sense to do it the project.
Absolutely, it does. I mean, that's the only way you could. I'm sorry, are we going above everyone's? No, at the project level, from a progress billing, so construction companies love progress billing. It's kind of how they either do milestone or progress billing. Progress billing assumes all the work that's done that month. So all the material that was spent, all the labor, and then you can incur that billing. A lot of other ways, it's hitting certain milestones that then you would then bill again. She's talking about the ability to capture all those expenses and then say to the customer, here's what we did this month within the system. And that's what online has a real issue now. Desktop, amazing. They had a robust system. It made it very, very easy for you, but these are some of the, and we talked about that, these are some of the limitations that you do run into when it comes to the desktop. So we should talk. I can definitely help you. I can at least come up with a solution for you because that's not right. There's something, either it wasn't set up correctly or something's definitely not right because, yeah. Let me, even if I'll reach out to Intuit for you to see if I can get you a better answer, something just doesn't seem right there. So, yeah, I bet. Wow.
We have a
That's
really
that's
complicated functionality of our business. We are a civil engineering company.
okay.
And so we have like different rates
Sure.
that we bill out, but they're all, we have the survey department and the.
So how do you do it if you don't do it on a project basis then? I mean, it would be
Yeah.
a nightmare.
We've been doing it all custom.
Customer base?
Yeah. Yeah,
Oh my
and we had an
God.
issue with the time tracking, so now we have QuickBooks Time that we're just starting. And we couldn't get that,
But you're still gonna have the same issue,
yeah.
even with QuickBooks Time, because if you're doing it at a customer level,
Uh-huh.
from a project.
And some is time and materials, customers, and then some is progress billing. So we have both, it's just.
So why it's really specific to her, because your time and materials, and we talked about this earlier, because she's dealing with materials.
Yeah.
Just a tax and accrue for the taxation portion of it. So different parts of this progress billing have different impacts on how she goes about it. So, yeah, it does we should talk. So definitely can help you in that department. How about foreign currencies? Anybody here deal with foreign currencies? Okay.
So is that's,
No, crypto's not, but, and
I've been paid with crypto.
how did that work out for you?
It's on my phone.
That's- Okay, and did they process it through QuickBooks?
No, I didn't do anything with it. That's why I'm like, I don't know what to do with it.
Wow, I didn't even know they had that functionality. That's interesting.
Yeah.
I've dealt with foreign currency before, and I mean, if you've been paying with crypto, as long as you have, well, you would need to sign up though to utilize some kind of cryptocurrency to facilitate passing it through. Otherwise, how are you going to get it to your bank? You even know
Yeah,
that.
no, it's just.
You can set up a crypto wallet.
Yeah, you can do the wall. That's probably what she
Yeah.
had.
Yeah.
Wow.
I got paid with an NFT. When I got paid, it was worth $10,000, and I did work for 3 months for them, and now it's only worth like $300.
Oh my God.
Yeah.
Cash it out when you have it.
Wow. Yeah, I'm gonna be honest, I'm not as familiar with the crypto side, at least when it comes to QuickBooks as of yet. I can certainly help you out though. I have had plenty of experience with foreign currencies only because working for a winery, we ship wine all over the world. So,
So if we have a vendor overseas, like we're on Alibaba, are we gonna see that? Like, say we wanna buy stuff from
sure,
a supplier in Indonesia?
sure. So the only issue when dealing with foreign currencies is if the vendor wants to be paid in US or, so in my case, I was dealing, so here's, and this is why I bring this up, just a lesson learned. So we used to deal with a number of wineries in Spain and Italy that would want to pay us euro, dollar. So here's the funny part, right? We give him net 30. He would wait until the euro was like super high against the dollar and be like, yeah, I'll pay you. So when we would get it, we would never, ever get what we billed him for. So I'd bill him for, 180,000, I'd get a $166,000 check. I'd bill him for, 220,000, I get a $198,000 check. And the reason I bring this up is that we had to go back and renegotiate him that we wanted the fixed dollar price on that day and not give him those net 30. Because when we start, you don't think about the fact that someone's going to leverage a currency against you. I'm just sharing a story because that literally happened.
Playing the float at another level.
I'm still playing the float in it. And so, I mean, and he wasn't doing anything illegal or illicit, but it's like, really? And so we would constantly be off our margins, we were supposed to get, 38% margin, we're getting 20. It's like, what the heck is going on here? But these are the kind of things you run into, and I'm just sharing this as a lesson when you deal with foreign currencies, okay? So keep that in mind. And the structure of the invoice obviously can be a little bit different too, but QuickBooks does have the ability to deal with multiple currencies. Do keep that in mind. Can't think of anything else. We've talked about reoccurring transactions, products, and categories. Does anyone use any class coding in here? I would be talking specifically to you because project-based accounting would lead us to class coding, which would solve a ton of your issues. But if you don't know what I'm talking about, that's a good thing. It just means you haven't got to that level yet, but class accounting can certainly help you itemize out. I might actually talk to you about a class accounting, if you have multiple vendors that you're dealing with them. It could certainly help you out a little bit as well. Okay. You don't do class accounting. Okay. So class accounting is a way to consolidate line items across multiple projects so you can maximize the best pricing on it, right? So as an example on my side, when I was with the construction company, we'd be doing 13 projects all across the country. We'd buy our wood from one vendor. We'd know what it was going to take for all of those projects, right? But when the bill came in, we could class code the associated percentage to each one of the customers, progress bill them directly, because as you know, the moment the wood arrives on the construction site, I can bill them for that progress. I don't need to bill them for it being built. I can bill them for it being built. Those are the kind of things you can use class coding on to segregate out over multiple locations, construction sites, e-shops. You can use class coding all along. Do not dive too far into it without having a clear understanding. You can make a mess of things very, very quickly. Okay. So I do want you guys just to keep that in mind. I like to mention that right now. Start to think about some of the things we've talked about, the other control side. Class coding can be a key part of that. Okay, we've talked about payment methods at length, electronic tracking fees associated. We've also talked about terms at length, making sure that we maximize the terms that we have with our vendors. And then having a clear understanding of the relationship between the terms with our vendors and the terms with our customers, right? From a cash flow management aspect. Keep that in mind. Right, not going to delve too much more into that side of it. Got it. This is just queuing me up. We touched on the attachments, right? I'm a big attachment guys when it comes to customers, right? I go office is paperless, right? Like I don't have any paper. I use the paper clips. I attach the W-9s. I attach the supplier forms. I attach the customer forms. They're there. If I ever have a question or anything, it's there, right? Don't have any file cabinets with files, stuff sticking tiles. I keep everything nice and concise. You have tons of room on QuickBooks, right? You're not going to max that out. There's over 1 gig available storage space, and you can expand that as well. You can also store them and host them locally too. So once those documents are up there, they're up there. They're available to you forever, as long as you have your subscription. I'm not going to touch. And that is actually it, guys, for today. Here's the cool part. We have a bit of time here. This is the part where I get to interact with you guys and go over a lot of what we talked about today, where I get to answer some of the more specific questions in regards to what it relates to you. The one thing I will say is I want to point out that the step on from this class is my taxation class. So we touched on taxation briefly today when we talked about certificates of rules. The next class talks about how we make these payments, who we need to register, what's the frequency, what dictates that, how do we go about that, right? Really, really key for people with employees, right? The structure and how we go about dealing with it is slightly different from sales tax to payroll taxes, but I deal with both in the next class. So if I didn't touch on that today, there's a specific reason for it. I try not to go too far into it today because it's very specific to the business that we're talking about. With that said, we do that class towards the end of the year. I also do the financial close of QuickBooks towards the end of the year in that class. Talk about what you need to do to close your QuickBooks out for the year, ensure that you reconcile it all the way through and that everything ties out. The reason being that once you start the beginning of the year again, you have a clean slate to start off point, but we want to make sure that we've done everything necessary to get you there. Does that make sense? The other part I like to ask is my classes are a little different to most classes you've been in. I didn't sit in QuickBooks clicking around the whole darn time. Okay. I just don't find that people have as much value in seeing me do that. You guys get to do it every day. But I like feedback. I like to know what you liked about the class, what you got out of it, and I also like to know what you would like to see in the class moving forward. Again, I try to make this as interactive as possible, right? I tend to find that you guys get the most value out of it. If there are more things that you'd like me to approach on, or you'd like to see me in QuickBooks more, then let me know. So anyway, I can improve this class, right? When is our next one? Just out of interest, so I can let everybody know.
That's a great question. We do have a Q&A in there as well.
Awesome.
Like,
and then we'll go through all the Q&As.
next one is December 1st.
December 1st, okay,
The break for the holidays.
right before, so December 1st. And again, I will send out everything you've seen today will come out. It actually be the entire guide, so it has all the classes that I do in there. Give you my card. You got questions, email me. Want to sit down? Come meet me. I'll sit down. We'll go through QuickBooks together. Again, I'm a consultant for the SBC, so I don't just work for Cal Poly and run the finance side, but I'm actually a consultant for the SBDC. I have the privilege of working with these lovely ladies, and it's their job to help local businesses. So I thoroughly enjoy getting to do this. I really, really enjoy it. So if you need help, if you want to sit down, pick up the phone, send me an email, and sign up to become an SBDC client if you haven't already. Q&A. So funny about the $600. So, do you want to read the question for me?
Sure. Could you explain again about 1099? What is the purpose of the form? If a short-term contractor earns less than $600, do we need to give them a 1099?
So the answer to her question is no, because below that threshold, you do not. Now, I track all my subcontractors, especially with what I talked about when it comes to the state of California. Now, listen, if you have 100 subcontractors out there that are all below $600 and you really don't think that it's going to be an issue for your business, then no, you absolutely don't. The purpose of the 1099 is to facilitate communicating to the government that those individuals are liable for the taxes and not the institution paying it. That is the premise behind the 1099. It removes the liability from the individual issuing out the payment and puts the onus on the individual receiving the payment. That is why they are independent contractors themselves. The benefit to them is they get to claim business expenses against that income that they've received, just like you guys do when you write expenses off against a business. The way to perceive an independent contractor is that he's a business unto himself, right? So that's why they have that $600 threshold. With that said, I just recommend that everyone have the subcontractor agreements on file. Make sure that if you're using an independent contractor, that you have an independent contractor on file, irrespective of the dollar amount. With that said, you do not need to issue out a 1099 if it is below that $600 mark.
Another question. Morgan asked, what is a good resource to quickly learn accounting fundamentals from a process standpoint?
Oh, that's a good one. There's actually a couple of places out there that I would, Wiki Accounting is a really, really good one, Morgan. And I can actually follow up with you in regards to, because I have, and I don't know if there's anybody, this gets down into the like core elements of process-driven accounting and the best way to go about it. Morgan was one of our accelerator teams from last year, and he started a great company. And so he's right in the middle of building his company up right now. So that's why he's posing this question. Morgan, let me follow up with you and get you some links in regards to that, because I actually do have some good resources. Again, I'm going to send out stuff to you guys. If you guys are looking for stuff like this, let me know. Certainly we'll provide it. Not everyone's into the side of the thing from a process-oriented standpoint. So I will get back to Morgan in that regard. What other questions? I loved how he asked about processes, because you guys saw me spend about 15 minutes yabbering on about the fact that so much of it is process driven. It really, 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 really is. And it doesn't just relate to accounting, guys. It actually relates to your business as a whole. The process that you have in place or what enable your business to run when you're not around. It also means that you have a defined way of going about things. And so if something goes wrong, you know what took place. That sounds kind of lame, but you know what happened, even though something went wrong, which makes it easier to solve. And the other thing about processes that's nice, guys, is we have a terrible habit when things go wrong of playing the blame game, right? The thing about the blame game is it's never fixed, solved, or addressed any issue in this world. But when you have a process in place, you look at the process and you say, process was broken. What was my part in that broken process? You find a solution without blame, and you move on. And that's a way better way to build a team aspect and to address issues within the team than to sit there and go, you screwed up, you made a mistake, and it's your fault. Because all those three things I just told you didn't fix it. They didn't address it, they didn't resolve it, and they certainly didn't stop it from happening. So our focus always needs to be from a process point, especially when it comes to accounting. And my philosophy, being a numbers guy, we're human. Listen, it's gonna happen. Every 1,000 transactions that I type in, there's a 3% margin behind everything that I do. Right? So it's just, even I'm gonna mess up, but knowing that I am means that I can account for it with processes to prevent. Right? And that goes for accounting, that goes for how you run your business, that goes for the processes that you do with your customers.
So if you can build a process that has a check and balance.
Absolutely.
In it.
Right. By the fact that you built a process, you've already built the check and balance. How you apply and enforce that is the check and balance.
Okay.
Right? The very fact that you have a process is a check and balance in of itself. Right? If you don't have a process, because you have a beginning and an end result, which is a process. Right? And so building processes is really what you're building is safeguards against certain things. Right? As your company grows, though, those processes grow with your company, right? And you pass those off into individuals that then know how clearly what to do. Right? I mean, if I'm doing my job correctly, and she knows this really well, I should be able to not come to work tomorrow. And everything will run fine. And she does know this because she lives that world. Her boss might be busy and in a meeting, and things will run well because the SBCC is a state run. They have a process for every single thing, whether it's onboarding an independent contractor to meeting with a client like you. They have a process for everything. But guess what else, guys? They're also extremely successful and extremely good at what they do because of that. Your businesses are exactly the same. Exactly the same. Right? That structure to be successful with you create for yourself, for your employees, right? That structure is what enables you to be successful. And whether it's QuickBooks and your chart of accounts, or an inventory control system, or the locations that we're talking about, or the services, that methodology still applies. Got me on my super shit there. Questions for me? What did you like about it? What would you like to see? Yes, so I try really hard not to overwhelm you guys. I'm like this bucket of knowledge when it comes to QuickBooks, and I've had so many different experiences that I could throw all this information and it would just like overwhelm you, which is when I talked about the glass. Yeah, I wanted to relate to what you do. It's no point me sitting here for 35 minutes talking about sales receipts when we talked about it. Nobody here uses sales receipts. POs, you know what I mean? I could have done this whole session around those things. It just doesn't help you guys. I need to understand what you're trying to achieve and provide you the knowledge in the areas that I see that small businesses have battled in. Again, this is where I call this the intermediate process of QuickBooks.
I have one question.
Sure.
Okay, so since you brought up the fact that you had an account or customer who was running e-commerce, I think you said, I'm curious because some of our colleagues are running their inventory control through the web hosting itself.
And that's not uncommon at all.
And so that's my question is how does that integrate with the QuickBooks inventory control? Do you prefer people control their inventory with QuickBooks, or are there other like these Shopify or some of these?
So a lot of them end up going out and getting an API with QuickBooks.
Oh, they just get the API.
They just get the API because at the end of the day, it's a lot. The analogy I would use is a lot like the banking system, where you see it hitting the inventory, but you have to validate it. Right? So just like the banking system, the processing through payments and validating against the invoice, the inventory system, when you go out and use the API, works on the same methodology. You're going to come in the next day and see what is hitting the inventory control system and then validate it. Right? Now, normally how this would work is at like a warehouse inventory level. That individual is seeing that order processor is hitting the inventory. That is then updating your inventory control system. Normally the validation, let's just say we're using a warehouse, takes place at the warehouse level to validate it. But if you're dealing with e-commerce, you're the one validating it, not the individual at the warehouse. That's the only difference. So really it comes down to what that communication is between QuickBooks and that API. And a lot of the systems out there, and I don't know if you've looked, but they have integrated with things like Shopify and what have you. But here's what I will warn you about. Make sure you have a clear understanding before you make that leap, because a lot of the issues and hurdles you run into with the credit card payment processing system, it's only exacerbated when you start to integrate other inventory control systems. And here's the last part I would say, there's more than one. So when you commingle APIs or inventory control systems together, that's when QuickBooks starts to have an issue. That's why it actually goes back to project-based accounting, because what she's talking about in using the project, you can use multiple inventory systems to track against different projects, right? Because in a construction location, you would have multiple inventories to build out each one. You could track them at that level. If you're consolidated together, you can't. And I'm going down a rabbit hole, so I apologize. This is where you would set up multiple e-stores as different projects within QuickBooks and have them hitting them differently. That way you could have as many as you want. It wouldn't impact you. But it goes back to what I've said. from the beginning, this, how you set it up, how
Right.
you structure it, and how you.
Stick wrapping a cable around a,
Oh,
an axle. Once you wrap it right, you gotta.
Yeah, you gotta unwind that whole time, but honestly, it goes back, so can it do it? Yeah, but it has to be set up in a manner so that the system can track those expenses and that's possible. Yeah. So what you would do in those cases, you would have these project-based by each one of these affiliates, so one would be Shopify, the other one would be so on and so forth. It still would flow through the same way you would just do them individually, but it would give you all the granular detail. I mean, you'd be able to ascertain which one is your biggest vendor, which one you're doing more sales. I mean, it would give you all the information you would want to know about growing your business, but you have to take the time, and to set projects up can take a little bit of time. It's very diligent, right? And it's very, very time consuming to go about it, but you won't miss a thing on a project-based accounting, not at all. Any more questions? Great questions, guys. Did you guys find this informative? Yeah? Okay, great. I apologize about the location and all. Any other questions out there? No. I just want to make sure that I have everyone signed in on the sign-in sheet, and then you have everyone else's email address. I will send this guide out for you. I'll hand out business cards after this. Don't hesitate to reach out. If again, one more time, SBDC, thank you for hosting me. They're awesome. If you're not a client yet, please sign up. Amazing services that they can provide business at no cost to you guys at all. So thank you to Madison as always for her help. And I think that's it.
Of course, yeah. Thank you so much.
Thank you.
Thank you.
You're very welcome.